All right. Hello, everybody. Welcome back to another episode of the Market Close. It is Tuesday, August 19th. We are back, and oh boy, what a day it has been. The market open was a bit ugly, to say the least, and we definitely had some red that we all saw on our portfolios really within the first 10 minutes of the day. Usually you get a little bit of a 10-minute pump, then by 10 a.m., 10:30 a.m., you get a bit of a dump. As soon as the market opened today, we just ended up straight dumping. And that has not gotten better throughout the end of the day. Now, there are some nuances to what we saw today in terms of price reaction. S&P 500 right here down about 0.61%. But I think the first question I want to talk to, or I want to ask everybody, and then we'll get into some of the analysis, is how are you feeling? What is the opinion, if you had to sum it up in a sentence, a few words, a phrase, on this market action today? Because to me, I've got one word to describe this market. And a lot of people are not going to like this market, or not going to like the word, but nonetheless, I think some people will agree with this word. It's healthy. Yeah, there you go, Brian. You got it right before I said it. It's healthy. It's very, very healthy. And I'm not just saying that to say that. Honestly, I'm saying that because you can't have stocks go up the way they've gone up since August 1st. This is the first real red day on the S&P 500 since August 1st. We were down about 0.6% on the S&P 500. We were down 1.6% on the S&P 500. We are still up 2% higher than where we were on August 1st. And if we were to go a little bit lower from here, or even a lot more lower from here, I think the consolidation based on the earnings growth we got and the multiples that got a bit aggressive based on that earnings growth, Meta to almost 800, Microsoft to 550, which both have corrected pretty substantially from then. Meta now down to 750, still up from 700 before earnings. And Microsoft got hit today, down to 508, down about 2%. I think that's healthy. I think Palantir, I know people are going to hate me saying this, but Palantir going to 157, down 10% of the day. I know it's ugly, 5 days in a row of red, but I also think it's healthy because Palantir 220 right now, as much as I would have loved it for my portfolio, would not have been healthy. And Palantir still at 157 is a $374 billion market cap. It is what it is. If you're a Palantir bull, you know that it's expensive, and you had to have expected some level of weakness. We didn't know when it would happen. It ended up happening today, and that's the pain you get. AMD was at 180 on Friday. It was at 185. I think it hit 186, hit 52 weeks high. Now it's at 167. NVIDIA, 176. This one's down 3% of the day. This one's down $6, 25 billion shares outstanding. So you're down almost $200 billion on the day on NVIDIA's market cap. Obviously, every dollar is a lot for NVIDIA. So it's not just Palantir. Palantir is getting hit a lot, but it's also Hoodie, down 7%. It's also AMD, down 5%. It's also Rocket Lab, down almost 9%. It's also Reddit, which went from 250 yesterday to today, 227. That's down 6%. It's also AppLovin, which went from 454 to 411, down 6%. So to me, the reason I think this is healthy, that's my one word. I see a lot of people in the chat agreeing that healthy is kind of their core word. Algos, I think that's also part of it, is because you just can't have stocks go up forever in a straight line like they do. And to get the good days, you got to get through some of the red days. Now, this is the heat map as we get into the final 12 minutes of this market close. The red that you're seeing is Broadcom, Palantir, Oracle, Microsoft, NVIDIA, Amazon, Google, Meta, Netflix, Tesla. The green that you're seeing is Berkshire Hathaway, Eli Lilly, Johnson & Johnson, Salesforce, Walmart, Costco, Home Depot, McDonald's, Bookings. UNH is down on the day, which is very weird. I feel like UNH should be up, but that one's slightly red. AT&T, Verizon, utilities, real estate, industrials, consumer defensives, restaurants, healthcare, pharmaceuticals, medical devices. We're seeing a little bit of a broadening out. Not saying the entire market is broadening out, but if big tech is the big red that you see on the screen and everything else is green, yeah, all non-AI, I don't think that's a bad thing. I'm not even just saying that to make it to help people feel better about the red. It is what it is. You gotta be a big boy and girl. And if the stock market falls and you're down a lot of money, that's just the nature of being an investor. It's not about calming people's fears. It's genuinely looking at the data and saying, okay, people are not buying NVIDIA today. Does NVIDIA deserve to go down 3%? I don't think so based on the earnings they're about to put up. But they're buying Home Depot, maybe because fund managers and algos are starting to rotate and get a bit more defensive. So then the question becomes, why are they becoming defensive? And I think this is the actual answer for some of the weakness we're seeing today. Powell. People are afraid of what the heck Powell is going to say. And I don't think that's something that people should take lightly. If Powell said, in the grand scheme of things, does it matter? Probably not. But if Powell indicates that there will not be a rate cut, a lot of these growth plays that are contingent on rates being down outside of the Mag 7, because it's relatively irrelevant for them, they're going to get hit, right? Just from a pure algorithmic perspective, if you don't have that rate cut factored in, or at least it's going to take another couple months to get it, you're going to get some of these multiples that compress. And I think that's okay. And I think the majority of people would agree with me that realistically, that's okay. Is this bearish is the question. That's what I'm going to ask in the chat right here. Is anyone feeling legit bearish based on price action today? I think it's reasonable to feel bearish. I also do think you would need a couple of days before today's price action can get you to feel bearish. Because, you know, to go full on bear, that means you start selling positions. That means you start taking profits, maybe taking some losses, just getting the hell out of the market. And I don't think one day of down 0.6% on the S&P after we've been up 3% since August 1st is something to be scared over. Now, if we were down 3-4% today, I would say, okay, something's going on. Like, we're down a lot. Like, what is the market concerned about? But after 18 days in a row of green, like literally 18 days in a row of green, or if not green, basically like flat days for us to get a 0.62% down day, which leads to Palantir being down 10%, Hoodie being down 7%, all these names to get hit. I don't know. It's not the most concerning to me. It's not the scariest. The only dip I bought today was 200 shares of Grab. That's it. 200 shares of Grab. So let me know in the chat if anyone bought anything today or if anyone sold anything. The only thing I did was buy 200 shares of Grab. Very simple buy on the dip. I think it was like 507, 508. But that is the extent of what I did. Now, I did have a post on Twitter about covered calls. So if you want to know more about covered calls, I know I talk about it on the channel a lot, but I was 5 characters away from the character limit, and I pay for Twitter Premium, so I get a lot of characters. It's a long post. And so if you want this covered call that I sold on NVIDIA, 185 on August 14th, it's August 19th. It's up 87% today, probably more now that NVIDIA continued to come down. And yeah, I think this is the day where covered calls really do matter. So if anyone wants to really go deep into the post, I went through a lot of numbers. You can read that post on Twitter. I'll put it in the chat, and hopefully that can help explain some more strategies when it comes to covered calls. And so that's what we got. That's what we got. Let's see. Nick said I bought some AMD. Rushil said I bought some Grab, some Hood, some NVIDIA. The Angry Plumber. 200 shares of Hood. I love that name. The Angry Plumber. I can imagine when you have to unclog the toilet sometimes. You might be a plumber who's angry. So there you go. Thank you for being part of the chat. Raul says bought some Microsoft and NVIDIA. Krishna says I sold some puts on Hood. Today was also a good day to sell some puts on a lot of names. Obviously, those puts could be assigned if the red continues, but nonetheless, the premiums are really good today. So much better than over the past couple of weeks when it came to premiums on selling puts. I bought some more SOFI. MicroStrategy has just been disgusting for the past couple of days. Again, this is based on Sailor update. Wow, 335. I did not see that. I have not looked at it for 3 hours. Last time I checked, it was 360. Dude, MicroStrategy below 300 would be wild. Like, absolutely wild. Adam Bergman has to be feeling vindicated right now. He's been trying to tell people that Sailor's dilution is not helpful. And, you know, he's in all these Reddit forums and group chats, and they always yell at him and say, trust the plan. And look, theoretically, you trust the plan, but like in the short term, the dilution can hit. And it looks like that's taking place. Where is BMNR? Is that below 50? That is 49. Look, I mean, I know it's down 10%, but the fact that it's holding basically 50, 49.75, not too bad. By the way, Open Door, I know I've been harping on this and not been that bullish on it. I got to admit, down 4% on the day in the midst of all this red, that's pretty bullish. The fact that people are willing to buy this at 360, it was basically below $2 for 2 weeks, and now it's holding 360. I cannot deny that that's bullish price action. That is pretty damn bullish price action, but it is still red on the day. Affirm right here down 5%. The S&P 500 down about 0.67% on the day. Greg says I bought some more SBET. Bodycam says I bought some more Google. Brave for You says I doubled down on SBET. Yeah, the preferreds on MSTR are dunking. I agree. Have not been the best. Nebius and Grab. Nebius, how was that? It was down 7% in the morning. Nebius right here. Yeah, still down 7%. CoreWeave, I think, was down 10%. That one's down 4.8%, so that one recovered a little bit. Ethereum, 4150. Tom Lee did say expect some weakness this week from the technicals. So what's green today? Eli Lilly, that's green. Verizon, that's green. Intel, based on that $2 billion SoftBank investment and potential 10% stake by the United States government, that's green. You got Home Depot, That's green. Oscar, it was at 17.50 today. That's still green. Lockheed Martin, another value play. That's green. Palo Alto, it's barely holding on to its green, but it had a good earning, so the street's giving it to it. Big Bear is down 5%. Duolingo, again, crushed down 7%. Roblox down 1%. Walmart, that's green. SolarEdge is green. Enphase is green. Micron's down. All the semis are kind of down. Lennar, Buffett's going long. The home builders, that's green. And then Novo, that's green. Everything else is taking a dump today. And I think that's okay. I think it's okay to see a little bit of that rotation. Now, the question is, does this continue? 59% of you in the chat said no, this price action is not bearish. Again, I tend to agree with that. Like I would, and if it does turn bearish, then I'll say it turns bearish. But one day of an ugly, what seems to be algorithmic downturn on the high beta names does not necessarily signal to me that we're bearish. But we got Powell on Friday. We're going to see what he says. Now, a couple of headlines. Take a look at this. The person who bought $12 million worth of Microsoft puts is now up 8 million and it's worth almost 20 million. This is why people buy puts. Sometimes you have the ability to hedge, and it looks like we're getting a bit of a hedge right there. Another thing that came out from Morgan Stanley, NVIDIA is the most under-owned mega cap tech name. Morgan Stanley's review of Q2 13F filing shows mega cap tech stocks remain under-owned by institutions relative to their S&P 500 weightings. NVIDIA is now the most under-owned, with its ownership gap widening by 92 bips in Q2, the largest among big tech names. The fact that NVIDIA is the most under-owned as a relative proportion of its quarter-over-quarter and year-over-year filings versus Tesla is kind of wild to me, because it's like institutions are saying, hey, we're feeling a little bit more bearish NVIDIA than Tesla, or at least more bearish NVIDIA than any of the other Mag 7, like even if you compare it to Apple. And that to me is pretty incredible. And I actually think that's bullish, because that's a bit more of a wall of worry. NVIDIA's been doing very well, and you do need a little bit of that wall of worry going into the earnings as well. This feels a little bit late cycle. There was actually a take on CNBC, and we'll play that after the bell, of a discussion around late cycle or mid-cycle. I think it was actually a very interesting conversation. So we will play that in a bit. I still do not feel that this is late cycle. In fact, you had Morgan Stanley's Mike Wilson come on CNBC today and say that it's the beginning of a new bull market, kind of the same thesis of Tom Lee, that the bear market was at the end of April and that was capitulation. And, you know, quite frankly, he made a point that I hadn't heard before. A lot of stocks, when I say this, is not going to sound accurate, but when you look at the numbers, it is. A lot of stocks topped in July of 2024. Remember, December of 2024 was not fun. You had the December 18th FOMC meeting. It wasn't literally Christmas Eve, but very close to Christmas Eve. And it kind of didn't crash the markets, but we were down like 1.2%. And like, it was just kind of a little crappy end of the year. And when you look at the data, it's like July, you did have a little bit of topping on a lot of names. And so his argument from Morgan Stanley is from July 2024 to April 2025, which is actually the time where you tend to have a bear market, around 9 months. We were in a bear market, even if it didn't feel like that. Now, the last 4 months going into April, it definitely felt like that after the Liberation Day and all that stuff. But that's why his argument was, hey, we bottomed in April. And the pullbacks are going to be rather shallow in a bull market, as they tend to be. And people are going to want entry on these pullbacks. Maybe your entry on hood is 107.41. Maybe it's 95. But it's not easy to determine that. That's why it's hard to time the market. But Morgan Stanley feels like those pullbacks will be rather shallow. So we're going to see. I think we need a few more days of data, and we will end up seeing how this plays out. Now, Palantir, again, I think this is algorithmic, along with the hoods, the AppLovins, the Coinbases, all of those getting hit today. But also, I mean, you did have a high-profile short put out a short thesis. And at the end of the day, I don't think he's going to be right of it going to 40, but could he be right that in the short term, it's not going to be stuck at 180? Yeah. Now, I think it needs to really go down below 100 for the short to be profitable. I don't know if that's easily possible. We're going to see over time. But you do have a high profile short. You have some algos coming into place. You got some people probably securing their profits after really good earnings. You could see a down 9% day, along with the fact that Palantir obviously is very expensive as well. S&P 500 right there, down 0.6%. We got 30 seconds until the market closes. We'll go over some headlines after the market close. Then in 20 minutes, we will have Jason come on, and we will do Technical Tuesday, and we'll see what he's thinking for technicals. But having said that, this is the nature of today's market. Definitely not a pretty market, but nonetheless, it's also a market that we all kind of got to go through in order to enjoy some of the good days. We'll do a year-to-date after this as well. We do a year-to-date on the good days. We'll do a year-to-date on the bad day, and see how ugly this day messed up for our portfolios. All right, Tuesday, August 19th. Thank you, everybody, for being here. It is 4 p.m. The stock market is now closed. ugly day, but the day is officially done. You can put in the chat what your year to date looks like. My year to date is now 91%. It was 110 on Friday. Volatility, baby. Volatility, 91%. That is my year to date. I think most people are still doing okay, but nonetheless, we all probably took a bit of a hit. Palantir ends the day down 9%, 157.75. Bitmine, 9.7%, 49.54. S&P, 639.77. S&P, the worst day since August 1st. Robinhood, exactly the price I bought it at last week, 107.50, down about 6.5% of the day. Robinhood did introduce football contracts for the NFL. So that was one of the headlines. They also got upgraded from Bernstein from 105 to 160. So they did get that upgrade. And this stock was like 117.40 in the morning, dude. So it's like, again, it's just incredibly volatile day across the board. NVIDIA, 175, worst day, I think, in about 2 weeks, down about 3.5%. SOFI, down 6%. They had a great blockchain announcement today, pumped to 24.96, was not able to move higher. Ended the day down about 6%. You have Uber, actually up 1.4%. UNH, I still don't get why UNH is down today. That is very confusing. If anyone has a theory, let me know. But I feel like UNH should have pumped with some of the other value names. Verizon was green, up 1%. Sharplink Gaming, wow, down 8%. They are well below their NAV. Did not expect Sharplink to be down 8%, but there it is. Coinbase right there, down about 5.8% as well. It's $2 away from going below 300. TASI, 329, that was down 1.2%. Google still closed above 200. Not the worst thing in the world. Meta down 2%, 751. Bitcoin, 113. Bitcoin did get to 112.7. ASTS down 7%. Rocket Lab down 9%. Raytheon down 1%. Palo Alto up 3%. Reddit down 5%. Amazon down 1.5%. CrowdStrike down 1.8%. Roblox down 1.3%. Duolingo down 7.2%. CoreWeave down 4%. And Nebius down 7.3% on the day. S&P 500 again down about 0.5% for the day. And that's what we got. Looking at these year-to-dates, Christina's at 23, SV's at 43, Keg's at 38, Jasmine's at 91, Retail Invest at 97. Most people are still in that 30% or above. Deneen's 40%, Arrow's up 13.7%. He is up 30. Brian's up 45. Yeah. So, I mean, look, it was an ugly day. Definitely if you're concentrating on some of the growth names. And I could imagine people got wiped out at least 4 or 5% today. But that's also the risk you take with growth stocks, right? Like I told you guys that story in the morning about the hedge fund manager I was talking to. Like they can never end a year higher than 15% because they're always so hedged to the downside. The beauty of being retail and being a long a name is that you have a multi-year time horizon. You could hedge here and there with like some covered calls or buying some puts. But over the course of 5 years, if you have a decent entry, you should end up doing well. And that should, have you a lot better than 15%. But to get to those days, to get to those multi-year returns that are in the 40, 50, 70%, you do have to have some pretty ugly days on a Rocket Lab today, which is down 9%. Now, if you bought it at 20 or 30 or 25 or 15, 17, 18 when it was bottoming in April, you're not that upset. But it does suck because if you have 10,000 shares of Rocket Lab, it's down $4 today. You're down 40 grand on paper. And those are some of the days that everyone does have to go through. SoundHound, how did that one do? I did not look at that today. SoundHound, wow, that was down 10%. That was up 40% last week. So that one got hit. Open Door again down 4% of the day. S&P down 0.5%. NVIDIA, as soon as NVIDIA started dipping in the morning, that's when I also felt, okay, we're definitely going to see some pain in this market if they are taking NVIDIA down. Nick, thank you for the super chat. I'm in the car listening to you with my daughter. Can you say hi to Emma? Emma, hello to you. Your dad is awesome, and he's part of the show every day. And he might not be the happiest today because it was a bit of a red day, but I'm sure you make him happier than his portfolio could ever make him. So shout out to Emma and Nick listening in the car right here. Viking, yeah, dude, that stock. Yeah, I mean, does anyone own this one? I've heard of their name. I don't really know what they do. Apparently, it has to do with weight loss stuff. They're down 42%. So this one also got hit pretty badly. Again, Jason will be on in about 15 minutes, and then we'll get into technicals. But these are some of the price actions that we had to deal with today. All right, so let me pull this up. This was a discussion I was listening to around late cycle or mid-cycle, and I think it was an interesting conversation. So let me see if I can find this exact moment, and let's listen to a little bit of it, because you got a variety of perspectives right here. So let's pull this up right here, and then we'll keep going from there. Now, in terms of the people who are just joining, asking why the market fell, I have zero reason that I can give you from Trump, from geopolitics, from economics, from Powell. That like no fundamental news happened today, which is why also I know a lot of people are confused. It seemed to be a rotation from high beta growth, the Pounters, NVIDIA's, Hoods, Rocket Labs of the world, into Caterpillar, Home Depot, Goldman Sachs. The Dow Jones was at a 52-week high today, outperforming the NASDAQ and the S&P 500. So it feels, if I had to give my best guess, people are afraid of Powell. And people are waiting till Powell talks on Friday. But that would be my best guess for why we had a bit of a sell-off today.
Here, you really typically need GDP above 2.5% to get that sustainable move.
That's why you still have the we're late cycle, and why that there's a maybe a one step forward, two steps back, rather than the other way around for that kind of trade.
Yeah, I agree. I mean, look, I can't answer, and it seems like we're kind of forming a consensus on the topic of when we will see people are innocent until proven guilty on the hyperscaler CapEx. I think we all get the sense it's too early to get panicked about it.
No, but you think that the other part of the trade is guilty until proven innocent. I'll reverse it on you.
I think that it's from the beginning, what he's like I am, the two things you struggle to deal with.
They're a buy, and that's, that we don't think that's on the horizon. We have said to people, if there are
we're late cycle.
From the beginning, we were told the productivity from AI will come second half of 26 into 2027. Disproving that here in August 25 is impossible. Okay, meaning as long as all this investments results in a broad group of companies telling us they're able to predict their employee and customer behavior better and drive margin expansion, as long as I still believe that's coming in 2027, I don't think I want to get too negative on U.S. equities. Let's call it 18 months anticipatory of that. So that's like another, I guess, kind of North Star or whatever that I'm facing with, which is, I want to buy high quality names with exposure to AI trade if they're down 10, 15%. Therefore, I don't think they're going down very much.
How about the most north of North Stars? I mean, Fed cut. Don't fight the Fed.
I agree. So to your point, when you were talking about, is it late cycle? It doesn't feel like it. In typical late cycle,
This is the part that I thought was interesting.
you would see credit spreads moving higher. They're incredibly tight. You would see bankers tightening lending standards. They're not. You would see the Fed having to grapple with rising inflation expectations. They're not. I would categorize this as more mid-cycle, a slowdown in the middle part of a cycle. And at this type of a slowdown, you need a policy response. And I suppose we'll all be listening at Jackson Hole. My invite got lost, but we'll all be listening Jackson Hole to see what we get.
Well, what do you think?
So, I mean, look, is it late cycle? And for those that are unfamiliar with that term, late cycle just means, hey, there's a bull market and we're getting towards the end of it, AKA we're topping out, we're late cycle. You should probably sell, take some profits and get ready for a bear market and then redeploy the cash when the opportunities present themselves. One of the things that wasn't mentioned in that clip is that the earnings growth in and of itself, yes, Technical Tuesday will happen in about 15 minutes. Jason will be on. The earnings growth makes it very hard that we all saw. I can bring up the numbers again, but we talked about it a lot last week. The earnings growth that we saw, 80% of S&P 500 companies beating on earnings by an average of 7%. It makes it hard to say there is late cycle behavior, especially given the point that he said about credit spreads. So if you don't see credit spreads tightening and you see earnings growth being as strong as it is, could we be late cycle? Yeah, but the fervor and sentiment and necessity for capital to be allocated in the midst of the technology growth that we're seeing driven by AI makes it hard, because late cycle would be, okay, things are getting bad either from a macro perspective, labor market inflation, we'll see what Powell says on Friday, or from a genuine companies suck at producing good earnings perspective. And in 2022, we had both. We had the highest rates in 40 years. That was bad. And we had the highest inflation in 40 years. That was bad for the macro. And then we had companies that were just missing on earnings every single quarter until we finally got to like summer of 2023. And that resulted in a 19% drawdown on the S&P 500 from January to October of 2022. Doesn't feel like that's happening right now. Now, granted, I'm sympathetic because when Chamath launches a SPAC, it feels a bit late cycle, right? It feels like there's excess liquidity in the market. So I get it. I am sympathetic to that. When every company is saying, hey, my company sucks, but I'm just going to raise some money and buy Bitcoin and become a Bitcoin treasury, that feels a bit late cycle. I agree. These are the qualitative parts of the market that we cannot ignore. For everyone who has PTSD from 2021, it is very similar, seeing some of these things that happen. And I don't think anyone wants to fall into the trap of what 2021 felt like. But 2021 also didn't have these types of earnings. And I think that is what creates my reservation on the idea of this being a bear market. And also, I mean, Worst case scenario, let's see this really is a bear market. Absolutely, you know, there will be some necessity for people in terms of a feeling of taking some profits and like just securing some gains, etc. But as I said in the morning, and I know it's repetitive, if you genuinely have a portfolio that you don't need to touch for the next 5 to 10 years, like if you sell Robinhood at 107 because you think it's going to 92 again, like unless you're planning to day trade it and or swing trade it and get back in at 92, like does it really matter if Robinhood's going to be $300 in the next 5 to 10 years? Like, you know, it's like these are questions that obviously the answer is it's better to stay put. And this is what Mike Wilson said. Let me bring him up right here. Mike Wilson said, hey, if you're fading this market for a 5 to 10% drawdown because you want to get back in after that drawdown, like you're acting like a hedge fund manager, and you could do that, but most retail, including myself, we're not hedge fund managers, right? We tend to go long and tend to allow the market to give us opportunities when those opportunities open up, which I think is reasonable to say. Here was Mike Wilson today talking about the current state of the markets.
You know, our data suggests that the retail investor really didn't sell in April. In fact, they were buyers all the way through that period. It was really more the institutional community that created that low, and a lot of the passive strategies, quite frankly. And it was so quick that many people didn't even have time to react. So my suspicion is most of the viewers probably have plenty of equity exposure. They're probably enjoying the ride. The question they probably are asking themselves is, should I be selling here because I made so much money? And in that case, you know, that's a personal decision. You got to pay taxes if you do that. My suspicion is if we get a pullback, it'll be probably less than 10%, which in the grand scheme of things, that's not what we're trying to trade around for most people.
So you believe we started a new bull market back in April. Why?
Because we had a bear market. And I think that's the thing that people don't really acknowledge, which is that, you know, the sell-off in April was really a final capitulation to a bear market that began last summer. If you actually look at most stocks, they topped in July of 2024. They were down anywhere between 30 and 35% on average. I mean, that's a proper bear market that ended with a capitulatory price action. So whenever you get that type of price action, you have some demarcation between the bull market and the bear market. That was it. It was the capitulation. So, you know, most bull markets don't last 4 months. They last, you know, years, year or two at a minimum. So I think right now we're in buy the dip mode because we're in that bull market mentality. And the question now, and I think you were alluding to it earlier, is like, what should I own? And I think, you know, we're probably getting to the stage of this bull market where you can probably see some broadening out. Maybe that's one of the reasons why we're seeing the Mag 7 start to maybe underperform a bit now. And that's really going to be contingent, in my view, on when the Fed starts actually cutting interest rates. I don't know if they're going to do it in September or not. But once they start actually doing that, that's when you'll probably see the bull market really broaden out.
Yeah, I said it was kind of a weird market day. I posted that to X as well, and it kind of is because all Mag 7 are lower right now. The Palantirs, the AMDs, the stocks that have been red hot the last couple of months, they're the leading laggards. In other words, they're down the most a percentage basis on the NASDAQ 100 and mid caps, which have been pretty much, you know, the Jan Brady's of the market, pretty much ignored Mike Wilson for a long time. They're actually slightly higher. One day does not a trend make. I get it. But does it feel like we're starting to see that broadening out a little bit?
Well, I think it's the beginning. So, like, you got to remember, it's also August, Brian. I mean, it's very thinly traded right now. We have a big event this end of the week with the Jackson Hole conference, and we're waiting to see if they're going to give us any sign on timing for that first Fed cut, which is probably forthcoming sometime in the next 3 to 6 months. And what I would say is that we're in that bottoming process. We've been underweight small mid caps now for going on 4 years. Okay, and it's been the right view. And
it has been the right view. Underweight small caps for the past 4 years has worked because small caps have sucked. Some individual ones have worked, but the Mag 7 are the ones that have actually performed over the past 4 years.
And we're starting to see the small mid caps start to bottom out a little bit on a relative basis, in the sense that they're not going down at the same pace relative to the S&P 500. That's the beginnings of something, I think. But I don't think it's time yet to go fully all in. But it is time to be considering that move, given the 4 years of relative underperformance.
I'm not taking anything away from the importance and magnitude of this week's Jackson Hole conference, but I'm going to take a little bit away from the importance and magnitude of it. Here's why, Mike. We know that Jerome Powell is out, probably in May when his term is ending. I know May seems like it's a long way off. It's really not. There's only a few Fed meetings ahead. And we know this. I think it's fair to say, right? And if I'm wrong, correct me, Mike, that the next Fed chair is going to be somebody who is definitely prone to interest rate cuts, period, end of story. So at what point, maybe it's now, do you and your team already start to factor in rate cuts because they are coming, whether it's in September or whether it's right after May?
Yeah, look, I think, the stock market is absolutely already pricing in some of that. That's one of the reasons why the rally has been so relentless. And it's definitely been part of our view why we've been more bullish since May, because we do see that coming down the pike. However, for the true broadening out, what we need to see is the back end of the bond market really come down to get the interest rate sensitive parts of the market really moving and get some of the capital spending going, which is also going to be helped by the tax bill. So we're in that window. Nobody has a crystal ball. The small mid cap stocks have had a good absolute move. Okay, so that's one thing you have to keep in mind. It's not like they've been flat since April. They've gone up quite a bit too. They just haven't gone up as much. So if we're going to get a consolidation or some sort of correction in the third quarter as we've been expecting, then that's going to be the time when you sort of make the rotation. It's going to all happen at the same period, which is sometime probably the next 6 weeks.
And that's where, if you're a bear and you've been looking to get the opportunity to get into this market, is what Mike Wilson says, that opportunity could be coming up. So, look, the way to characterize this in the simplest way, for those that, don't even want to get so nitty gritty into it, it's people are selling off some of their big tech and high beta profits, and they're rotating it either into cash, which kind of explains the money market fund inflows that we saw last week of 33 billion. I wouldn't be surprised to see more this week. And the green on names like a Home Depot. And again, when I mean people, I also mean institutional investors that are up a lot on Palantir. They see a 10% red day here, they get scared. Maybe they bought in at 100, it's at 150, they didn't sell at 180. They may take some of the profits and say, screw it, I'm going to put it into Berkshire Hathaway, which is down year to date. Berkshire has not really done anything this year. Or put it into McDonald's or put it into Home Depot. Just put it into something that's safer than a Palantir right now, because they might not want to be attached to it for the next 10 years, and that's okay. And so when you have that much money leaving the Reddits, the Palantirs, the NVIDIAs of the world, the Robinhoods, Rocket Labs, all at once, and rotating into other stuff, then that's fine. That's just how the market works. Now, on next week, if all those stocks go up 5% and all those fund managers say, screw it, I don't want to be in Home Depot anymore, I want to go back to Palantir, then it rotates back, right? Like, that's just the nature of what happens. Could this be the elongation of an actual rotation that takes time? Like Palantir legit chills out in the 150s. Robinhood maybe chills out in the 90s and 100s. Maybe. We're going to see. But today was the first taste of it. The question is, will it continue? And I think we're going to need a few more days at minimum to see how this rotation plays out. Stock draft. Here's the update. Matt is up 19%. I am up 11.8. Tanner is up 4.6. Steve is down 3. Chris is down 1.5. So it's Matt, Tanner, Amit, Steve, Chris. Matt, let's do losers. His losers are Berkshire, EOG, energy play, and Bros, Dutch Bros. Tanner's losers are Now down 12, Melly down 5, TTD down 25, ASML down 4. My losers are Visa and Duolingo. I'm very close to Tesla being a loser. It's basically flat. But Visa's down 3, Duolingo's down 30. Steve has a bit more losers. MicroStrategy down 12, Hims down 30, Crowd down 12, Netflix down a little bit, down 1, Salesforce down 6, PayPal down 4. And then Chris, UNH is now gone in the green. Axon's down 3, Elf's down 5, Cisco's down 12. No, Lily's down 12, Cisco's up 4. Novo's down 25, and Take-Two is down 4. So everyone took a hit on their ETFs today, but the order is still the same. Matt, Amit, Tanner, Chris, and Steve. And that is what we've got. People who sold AMD and NVIDIA are ready to roll into Intel. Look, it would not surprise me if people are like, hey, I'm going to go in with SoftBank and the United States government and take my profits on NVIDIA and go to Intel. Intel right here up 7% on the day. Now, granted, fundamentally, do I think that makes sense? Not really, because I think the growth on NVIDIA is just way better, and AMD. But this is a market. You're going to have a lot of people making different decisions up and down on how they want to ultimately allocate capital. So that's what we got. Donvin, thank you for the super chat. The explanation you gave is the exact reason I'm here every day. Cheers, brother. Thank you for the super chat. Appreciate it. One final thing I'll say before we get Jason here onto the show is, and again, it sounds repetitive and it sounds cliche, but I think on a day like this, it is important to remember this. it is okay for your portfolio to be down and for you to not worry about the portfolio. I know we've been locked into looking at green candles up and down and seeing portfolio moves go up, but in the midst of being able to get those amazing days where we feel like we're on top of the world, you have to feel like shit, right? Like if you want to be really good at something, you have to go through the pain of being really bad at something or dealing with the volatility of being bad. Like not every basketball game you play in the NBA, you're going to win. But if you win a championship, you have to deal with some of the losses. And so it's such a cliche metaphor, but it's true. And the other thing that's important to understand is on a high flyer, like a Palantir, I'll use that as a specific example. Let's say you bought in at 40, 50 bucks. It went to 180. Now it's down to 150. There will be a lot of people in the ether of social media saying Palantir this, Palantir that, or Robinhood this, Robinhood that, or Rocket Lab that, like the stocks that have growth multiples that get compressed, given we have a nasty day. You'll have a lot of people come out and try to make you feel like you're an idiot for owning those names. Those people did not buy those stocks at the levels that you bought them at. Those people will never touch those stocks. Those people don't have the guts to get into those stocks. And as a result, they don't have the gains. Now, that's okay. They're not bad people for not owning those names. I think it becomes toxic when they make fun of other people for owning those names. But most of those people don't understand how early a lot of people that are in those names are in and why they continue to hold and really have a long-term view. So if someone wants to laugh at you being down on Rocket Lab, but you bought in at 15 and it's down from 53 to 40, but you're planning to hold it for the next 10 years when you assume Rocket Lab will be like 120. It's one of those things where you just have to take with a grain of salt because that stuff is going to happen inevitably. He's lying. They are bad people. They're not bad people. It's just, they tend to be toxic. Social media tends to be toxic. And so when you're seeing those comments, you just have to keep a clear focus on your portfolio, your strategy, your time horizon, and ultimately your ability to manage your own emotions. And if that requires not watching my show, just saying, hey, look, I don't even want to think about the markets, then it is what it is. You have to be able to manage your mental because the worst thing that could happen on a drawdown is that you actually start to feel really bad as a human being. And at the end of the day, that should not be what ends up playing out. All right, let's get into it. Thank you all for being here. We're going to get into Technical Tuesday. If you do not care about technicals, this is the time where you can leave. I will have chapters in the show notes, and you'll be able to click on any stock if you want to come back in a few hours and see specific stocks. If you do care about technicals, for the next few hours, we are going to bring on one of the utmost people that I respect in the technical community. And we're going to go through everything we've got in this market that had a bit of a red day from a technical perspective. Ladies and gentlemen, it is time to roll the intro. What's up?
We made it, man. We made it.
We made it. How you doing, brother?
It never gets old, this Asian Steve intro, dude. Like your chat is freaking amazing, dude.
Chat, I said if you don't care about Technical Tuesday, you can leave. Chat's like, bye.
Hear this.
Chat, are you still in the comments? Are you still in the comments? Are you still there? Did you tease us?
Oh, God.
Chat's like, no, hold on. Before we continue, I got to show everybody this. So I commented red day on Twitter because it was a red day. And freaking Chad almost ratioed me on this post. It was like, thanks for the insight. So you're welcome. I said I used the ontology.
Oh, nice, dude.
I used the ontology. All right, dude. Let's get into it, bro. I mean, how are you feeling, first of all, on this day?
I'm okay. I think, well, I feel like tomorrow's a big day, or at least the beginning of maybe some big stuff ahead. We have Jackson Hole, right? So I think I'm feeling like the market's the market likes to get on edge in general.
It's on Friday, by the way, not tomorrow.
Well, so Powell's speech is on Friday, but Jackson Hole starts tomorrow.
Right. Yeah, you're right.
Yeah, so it's tomorrow. It's like a 3-day thing. But yeah, Powell's speech is tomorrow. Tomorrow or Friday. Tomorrow we get we have some data that comes out. Maybe a saving grace tomorrow is we actually get FOMC minutes, which I'm not going to say anything. If there was to be some kind of saving grace tomorrow, it might be that the minutes will review whatever the chatter might have been in the back halls of the FOMC of the two dissenters. The two dissenters that we had the first time in however many 30 years or whatever, what was going on back there. So, but all that said, I mean, yeah, it's just, I don't know that it's seasonality per se. I mean, it is seasonality, but definitively, look, the Bears for the first time in a very long time, definitely have control this week. But hey, can we give them a week? I mean, there's 52 weeks in a year. This is like one that they've gotten so far. So congrats. Maybe the week's not even over. It's just Tuesday. So.
Oh, it is just Tuesday. You're right. Yeah.
I know. Half the time we look at this and it's like, well, by Friday it might change.
Right. Let's start off with Palantir because that one had the nastiest drawdown today, and I am curious about your thoughts on the technicals here. So I think we'll start off with Palantir. Guys, I will put a Google Doc in the chat. We will keep a running list of all the tickers. We're going to be here for another couple hours, so just please be patient. We will try to get to everything. But we'll start off with Palantir.
Yeah, let me I hate how this is.
Yes, we'll do Uber. We'll do all the big ones, NVIDIA, Tesla, S&P, the Qs, and then we'll get into the other requests. That
we got to change a couple settings. Can you guys?
Oh yeah.
Can you guys see the numbers on the side? Different monitors, so I'm trying to change some settings so they can see a little bit better.
Yeah, you're good.
I think it's a little bit better. Hopefully, I'll say. All right, so I'll just start like on a weekly perspective. So clearly, it's a down week. This is just blue line, top bottom of last week's zone. The week before last was a big kind of breakout week over that. This yellow line happened. These two yellow lines happen to be the monthly candle. So if I were to change this to a monthly view, technically, we're still well within last month's range. So all in all, I think to your point, I mean, realistically, we're still within last month's range. What I would say is if you were to take like a basic measurement, if we continue to stay inside of last month's range, which means last month's high is 161, I'll just put it this way. If we were just to retrace 50% of last month's range, if we do continue downside, that would put you about 145s, give or take. I'll drop this back to a weekly. But a retest of the top of last month is about 150, just underneath 150, right underneath that 50-day simple moving average. And again, the SMAs on my screen that I use, these are always locked on the daily time frame. I'll try and make these a little bit bigger so you guys can see them. I use a 20-day, a 50-day, and a 200 daily simple moving average that are always locked on to the daily. Whether or not
you do have a point. We've come down to prices that we were at last month, right before earnings, basically.
Correct. Well, not even that. I mean, we're talking about Monday, August 4th.
Yeah, totally.
Monday, well, earnings. So essentially, we've just given back the earnings move, which happens to a lot of stocks at this point. So it sucks to see from a Palantir perspective. But just that weekly overhead, I don't know if you guys remember, and maybe if we get to Meta at a certain point, I remember last Tuesday talking about this, but there's a setup we call like a look above and fail. Again, not from an investing perspective, but from a trading perspective. When you see something that tries to get over a certain hurdle, and that would be 187, that look above, it's very much like if you have a bullish mentality and it tries to break down, something tries to break down, but it can't go down any further, all of a sudden it reverses. It's just that, but inverse. Like if I flip this chart upside down, you might recognize this kind of a setup, right? That's all that is an inverse chart. It's the very same setup, but in the reverse. So maybe make note, these are certain things that are happening. That said, we are just coming into another balance zone that happens to be kind of this monthly monthly pivot, right? So that's 161 as I have it here. Let me just make sure I have this right. For whatever reason, my candles are not aligning with me right now. It's showing me 161 as last month's high. Maybe you can confirm that.
Yes.
So,
yep.
Is that right?
That's right. That is correct.
Okay, so I think something's off on my indicator. What? Oh yeah. Okay, so 161. So we're inside of last month's range, and that this red line is a quarterly high. So 148 is that other balance zone, and I think if we do retrace a typical retracement, I think a lot of guys would know this. If we fail that, it would if a 50% pullback of the last month would look like this, could look like this. And if we want to be bullish, which we can be, depending, we're kind of looking at this balance zone. So what I'm going to do right now is I'm going to drop into a smaller time frame and just look at, here was the last resistance area. I'm going to change this box to white. Let me know if I go over time. I'm going to take off some of these. I don't need like these smaller moving averages.
While you're doing that real quick, we do have some news. Trump just released a list of equities that he bought over the past month in July. It's equities and assets, but it doesn't look like any stocks. It looks like convertible debt or something.
Convertible debt.
Dude, he bought like Illinois State 5.25% due on May 1st, 2042. I'm so confused what the heck these are.
Huh?
It's like a 13F from Trump, yeah. And it's Trump. It's not the White House. It's like Trump. Like personally.
Weird. So he wants to participate in 13F season right now? Is that what's going on?
There's no actual stocks. It's just all these like senior convertible notes. I think that's what it looks like. They're all due in like 2035, 2042.
Wild. All right. So these are your estimates. So white is the
bonds. That's what they are. Municipal bonds. Correct.
Oh, munis.
They're munis. That's what they are. Yeah.
Well, he doesn't like taxes, so there's that. So the white is the 20-day simple, blue is the 50-day simple. We're coming in from an area where we were in simple moving average, kind of like expansion. But as long as price is underneath the 20-day here, and I just drew this in as an extension. As long as price is underneath, call it yesterday's or the weekly 170s, then what happens is that simple moving average will the distance between them will actually start to contract in this case, which means that you're going to probably have some kind of consolidation event. As long as price doesn't do this, meaning as long as it doesn't break down below these 150s, and I get that this is a lot of momentum, so we do have to be you have to be somewhat cautious here, because big momentum, if you have some kind of knee-jerk sell-off, it's possible that you do get like a 1 or 2 day balance that breaks because there's a lot of momentum into this. You might get this quick move that's in the 140s. And if you do get that, my gut is that you would probably then get a bounce. The bounce has to be sustained in something like that. I would just be more watchful here, because if you get this move, then I would be really cautious of a further pullback, because over here you would want this to continue to balance, and then that's what a recovery would look like. But all that said, what that means is that this entire area, if you do have it, looks like a waiting period to me, with a possible liquidity grab down in here, but not really in the clear until you're back over the 160s.
What is your last question on this? What does your gut say on Palantir?
On Palantir?
Yeah.
My gut says that would literally just to wait on I would say sit on my hands. You had a big move. The only thing, as I was looking at this the other day on my stream, I looked at Hood at the 110, I was like, wow, this stock is just blowing my mind literally every day. Which, by the way, came back in today. But I was like, well, could Robinhood or could Palantir do something similar? And I was like, well, this, having had earnings, I was like, could Palantir continue to do this? And I was like, even this post earnings, this is a 1-2 day balance. And I was like, no, I don't think it really could at this point, because this is only a 2-day balance zone. It's not strong support on Palantir, albeit post earnings. I just didn't see this as strong support by any stretch of the imagination, right. Even though it was post earnings. It just didn't spend enough time going sideways here.
2 weeks post earnings. That's it. So
yeah, and in this range, it's 2 days. So
yeah.
At this level, so it was either gonna hold or break. It chose to break, but here it has spent a significant period of time. This is a 20-day balance zone. So here, do you have a better chance of holding than you did over here?
Right.
So it's, to me, in that sense, yeah, somewhere in here with a possible kind of like slight breach of support for a period of time, possibly down to the 140s, which is a larger supply, what we call supply, like a stronger base that lines up. I have some confluence. I have better confluence around 140 than I do around 150 anyways. So from a lot of different areas. So I have more confluence, one from that 50% retrace of last month. Yes, it's below the simple moving averages, but I don't really care if they're above or below. I mean, I do care that would be contracting or expanding, but like I said, even if you do go in for some kind of a, what we call like liquidity grab, it's just what it would be called. I still wouldn't know that it's out of the weeds until, I don't know if anybody caught a screen grab of what that looked like. But even if it went sideways and we caught a little bounce like that, I wouldn't know that it's totally out of the weeds until it's well over that 160 area. And in that case, these simple moving averages would probably look like this. And then I would be back in an expansion mode. And that all of that said, in this instance, having this kind of filled in, what we did was this move from here, 170 to 160. See how thin the structure was?
Yeah.
Up here. Sorry for my chicken scratch. But we just filled in a very thin, we call these a fair value gaps, because the amount of time that the market spent moving from here to here, it created a very thin structure. So to see it move this fast through that area, it happens quite a bit, right? It's called a fair value gap because the market didn't have a chance to decipher what fair value was within this price gap. And so now typically what happens is price actually ends up chopping somewhere in here before it can get back out.
Okay, that's fair. NVIDIA, what are you thinking?
Whoa, did not see this one coming. I was actually shocked to notice. Did you notice on the 13F season, on the 13Fs that came out, how few people held NVIDIA?
Yes, Morgan Stanley said it's the most under-owned Mac 7 proportionally.
That was a big standout to me.
I think it's kind of bullish because there's a little bit more of a wall of worry that NVIDIA is getting to climb. Like not everyone can work about it, right? Very
true. Very, very big wall of worry. Large month. I think you do the same. I think you do the same exercise, right? But I don't know that we're. Let me just reference Palantir. Well, yeah. So Palantir already down in the week. Just broke the weekly. I was in a meeting for most of the end of the day, so I didn't see a lot of this. I think at this point, trade location is a little rough. If we can reclaim in general last week lows across the board, let's say 178, and those 20-day simple moving averages, that would be step one.
Yeah.
And then Monday's lows. If we can reclaim that, I think that is the most bullish situation. My gut, when I was looking at this on Monday with Evan, Stock Market News Evan, my gut told me initially that it was probably time to take measures on NVIDIA anyways, because it had taken 1, 2, 3, already 4 attempts at the highs. And as I was looking at it, I was like, that is actually too many attempts to not be able to break through already. This is on our other stream. And I was looking at the Monday balance zone, and that being just slightly below. You have to pull out a microscope. But again, if you're a technician or if you're a very technical trader, you might have seen it. But see how all these balance zones are actually slightly higher, and then coming in Thursday, Monday, and then Tuesday locking in yet another, we call this lower high, high, lower high, lower high, another lower high. The buyers just got less and less aggressive. Apparently today they just didn't show up to play. I don't know if they were on vacation or school's just back in session, so they were too busy dropping the kids off in the morning and just didn't show up.
There is very little volume over the past couple of days. Like even SPY was 40 million yesterday. Today, well, today it was higher because it was more volatile, 69 million, but tends to be around 70, 80 million.
I will say that volume is going to be a thing moving forward, just because of where we are in the calendar.
Yeah.
School's coming back. School is in session. Most of the schools are coming back into session. Just what's happening. And we're in that kind of transition. You have a bit of a.
I also think it got sold off going into earnings, right? The street wants to see, can NVIDIA put up the results again?
Yeah. So I think if you were holding out for that last little push ahead of earnings, you might have. So this could go both ways. So first of all, August is a coin flip a lot of the times. And welcome to August volatility. I don't know which way this is going to go definitively. What I will do here is I will say that if it's back over 178, this is not a downside move any longer. Just to be crystal clear. And that can this is August, that can very easily happen. Is that a long-term good buy? No. Will this be a nice little, I can't say that for sure, but will some people, especially traders, especially near-term traders, use this kind of a dip near-term for potential earnings run-up? Many times they do. So could it be a fake out to the upside or to the downside, just like we've seen these fake outs to the upside? It absolutely could be. So I would just be very cautious of getting trapped into thinking either bullish or bearish. This is par for the course of August. What bearish continuation looks like, so that we know, is that you get rejected below the 20-day simple, below the prior week low, which is 178. That's what bearish continuation looks like. So around the same pivot, which is why I would say, hey, just maybe wait a little bit. You don't need to go rush out and short everything, right? Like if I'm hedging now, it might not be the best trade location, because clearly after a move like that, look, it's intraday moves like this will increase volatility substantially. Intraday volatility. Sometimes it's better to wait a little bit and let it just go sideways for just maybe half a session. But you have a bit of a balance zone in the 170s. If it does chop sideways, the good thing is you don't have those simple moving average expand. You don't have those simple moving averages expanding, right? any of this downside, the simple moving averages are going to be contracting. So you know that before a big downside move tends to happen, you will have some consolidation. So even if you have to pull the ripcord, like we've been saying, if the market decides to turn the corner, there will probably be time for you to recognize some signals. Right now, the signal is, hey, we're not going up right now. We're no longer making net new highs.
Yeah.
Have we made a new low? No,
Yeah.
actually, we haven't made a new low. Is this going at least into a stalling momentum? Yeah, for sure. Has this trend broken? Yeah. Near term, was it super steep to begin with? You betcha. Do I still have earnings coming? Absolutely. Does Jason and Amit, do we have like our thumbnails ready to go that says NVIDIA saves the market for the day that NVIDIA reports earnings? You bet you. We already have those thumbnails ready to roll because we use them every single year. Just so you guys know, right? Because
whenever we have a red day, this red thumbnail that I have to like scroll through all my files to see if I can find, because I haven't used it in like a month. And
but they're there. Let them know they're there, right? Every time it's this, a little bit of the jitters come in, and it happens, right? And then somehow, and my NVIDIA to the rescue thumbnail is like, I don't know, it's like some robot, and it's like robot of NVIDIA reaching out to save the market. And it's like he's like a fireman rescuing the market from a fire. But it's the question is like at the very
I thought that was me, bro. Is he gone for you guys? Yeah, he's gone. Okay, I thought that was me. That's him. You're back.
Yeah, internet glitch.
Yeah, I didn't say anything because I thought it was my Wi-Fi and I thought everyone could still hear you, but it was you.
No, I have Comcast business internet.
Oh, dude, tell me about it.
Dude, by the way, business internet sucks. It's like 10 times more expensive than regular residential. That's what it looks like. NVIDIA, it's already ready to roll. Just so you guys know. NVIDIA to the rescue.
Yeah, I stopped moving because I was like, it's not me, it's him. So I didn't want to say anything and interrupt him while he's talking because I thought it was me. But
no, it's
okay,
sometimes.
Can we do hoodie?
Oh yeah, I haven't really looked today.
And then we'll start doing some of the others as well.
110 did not hold. Hoodie was a little bit different. So right now, hoodie, I have a look above and fail on a monthly direction. So hoodie is a bit at risk. It has not gone down on the week like the rest, but I definitively have what we call a look above and fail on the month. Yellow line here is the monthly candle, meaning if I switch this to a monthly perspective, it's just this little wick that shows up on a longer term view. That little wick means that, well, it tried, A for effort, but we're not continuing higher. So to continue to press upside bets here on Robinhood aggressively, not advised. Hopefully you caught the message. Not advised to aggressively push upside bets. Ill-advised, quite frankly.
It's up 3x year to date, so I agree with you, dude. It's up a lot. It's taking a breather, and technicals, as you say, might be a bit aggressive here. I do think they have a lot of catalysts, though, so we'll see if the catalysts are enough to move it. But
is that a weekly?
Yeah, covered calls on Hood. I mean, now granted, could Hood be explosive?
I don't like to do the short-term covered calls, but like, if you're selling January 150s,
which the premiums are still phenomenal. I have a couple of December 140s.
or like, what do we want to do? March 2026 150s, 175s.
S&P inclusion could still help it, but if like we're not getting any rate cuts or whatever, like at the end of the day,
Yeah.
still get ugly. Okay, can we do Meta? This one, S3 Partners said, is the most added short in the market with 11 billion over the past week added.
Yeah, so Meta, we did outline this for sure last Tuesday, and I was like 783, and if you go back into last Tuesday's timestamps on Meta, we outlined this concept of a look above and fail. And I think it's very important because we said, look, it looks like it's going to go. You could take it for a very short-term move, and it's going to likely come back. But what you need to see is you need to see this hold, and then that next move needs to see a full continuation higher and hold above, and then and continue like this. Otherwise, you could be in trouble. I don't know if the chat remembers that. And I outlined what trouble looks like, and it was this. And so this concept of a failed directional move to the upside, or others might call a look above and fail, is super important, right? Like it's very important. I think we know it. Most people know it as a liquidity grab, and they think of it from a bullish perspective. But it absolutely exists from a bearish perspective, and it looks exactly like this. Side note, we've been tracking Meta for years, collectively, as a group, as a pair. I say pair. This is in my chart from way back. I don't know if you remember looking at Meta here and having a very similar view as the SOFI and drawing this, what we call.
Yeah, no, I do.
This has not been changed by me. Still up in this ascending kind of trend. This is from when we looked at it way down here. Not to say that it has to come down like SOFI. Like SOFI is tracking, essentially has made this upper bound its channel, right? Where SOFI thus far has really just kind of like hugged this upper boundary. That is best case scenario. The downside here on Meta is very close to here and now. So also trade location matters. So if we're like all the rest here, I think a lot of the downside near term actually may have happened. And so for me, I wouldn't be too keen on pressing a downside bet here. I really wouldn't. I would wait to see, does more downside actually show up, or have we kind of hit max pain, at least for this week? Because if I do right here, right now, 750, and I'm not saying trading is hard, right? Just so people know, like, it's not as easy as like, oh, it's going down. Right now, like, we just tagged that little 745 top, and we just hit this balance zone right here. This is that last month. This is technically a retest of last month's candle, like the monthly low. That was a little bit of a gap. So there was a clean session gap here. And we are testing the 20-day simple moving average. It's a just okay area of confluence for some support to show up. I would say this is actually a $5 range in between 740, maybe $10 range, 740 and 750. That can act like a general range of support. It's not super strong support here, but to me, what this means is like, it's not a good place to take a short. It's not a good place to take a long, because if I did take a long, I don't know how long-term that long could be, because I'm still not over these breakdown areas. So meaning if this does go up, well, unfortunately, the support that I just broke through was a decent 15-day, call it 20-day balance zone. So if I do take it long down here and I do get a bounce, I might feel really good about that for a little while. but I could quickly end up in a lot of trouble like that. So it's somewhat dangerous near term.
Is there a specific target like 600, 650? Is there any number in your head that you're like, I get really excited?
On Meta?
On Meta, yeah. Because below 700 would be giving back everything on the earnings pump. Like it's still up 10% or 7% from earnings. It hasn't given it away yet.
You mean like, is there a number on Meta where I would have to just like, I'm going to have to sell everything else?
But not sell everything. But like, you're like, I'm buying 100 shares if it goes to that level.
Oh, 550, I'm buying 1,000.
Okay.
Like, with like, this is stupid. Like, like that's just, that would be, but that's stupid. Like, would that happen? I think everybody would. I don't know that everybody would, but I mean, 650. So I'll draw. So 650 would also be irrational. 700 would be mostly irrational in short order. 700 would be mostly in short order. I have to say though, it really depends on your time horizon and how we come out of this seasonal. If this ends up being a bit of a pullback, we'll see. To me, we talked about this. It was always from the gate. You and I have had this conversation on stream on this channel, coming out of what do we call it? The Trump
Liberation Day?
Yeah, Liquidation Day. Out of Liquidation Day into end of July. It was raise cash end of July. And then the plan, that was the plan. Hold, stay long until end of July, raise cash. And then right before the eating season. So right before October, not to plan it out by like the calendar, but you know, right now I kind of want to let the dust settle. I don't want to jump in. Look, we have been, there's no reason for me to jump in right away to think.
And I think that's true on a lot of stocks that have run, right?
Yeah. There's like, yes, this is a big 2-day like pullback, but quite frankly, like there's no reason for me to sell anything like crazy. But at the end of the day, also like nothing is on, everything's come up so much that there's nothing that is really on that great of a sale in this sector.
Okay, so switching from Meta to its competitor in the sector, Google, which is holding 200, I would imagine you've got to be kind of happy with its performance.
Yeah, you know they have an event tomorrow, right?
They do? What's the event?
They're releasing all their new products.
Guys, what's the Google event? I do not know.
They're doing all their Pixel 10 release, iPhone killer. I don't know.
You're right. Google Pixel 2025. 1 p.m. tomorrow.
1 p.m. tomorrow.
Okay.
You know that commercial?
Yeah, the one there they make fun of Siri. Yeah.
Yeah, I almost thought about taking a little itty tiny bit short on Apple, but I forgot because I was like, I don't even know about if going long Google would be a great trade because it might be a sell the news event. But maybe I could go a little short on Apple. I don't know. But honestly, I think it's just the bears are in control this week. We do have some very thin structure here below 200. I talked about selling some October calls on Google, which is exactly what I've done, as well as Apple. So I'm happy with that decision.
Do you think holding 200 is relatively? I mean, this thing, if it had a meta like mine, it would be at 180 right now, right?
When in this 190s area,
yeah,
mid to low 190s. So we're not even, we're just basically talking about a look above and fail on the weekly area of Google. We're still very much in the upper bound of last week's range. Just getting to halfway of last week's range on Google is 195. And that's how you have to look at it, right? So this super bearish pattern that maybe some people were like, oh, it's a head and shoulders. I hate these patterns. Whenever Amit asks me, like, isn't it a head and shoulders? Like, anyway, anyways, it's like, no, this like whatever breakout consolidation. It's more like, do we test in here or not? Or then if we do, okay, well then maybe I need to have a different consideration. That 195, if we lose 195, then we may be in bigger trouble. And at that point, maybe I do consider just closing out the near dated calls, or I have to convert them, or I have the option to convert them to straight up credit spreads.
Right.
Actually, which may not be a bad idea, because at that point, the bigger balance zone that we test is possibly 185s, but yeah, we do test that 50-day, et cetera. Overall, I would slap on like a 20-day simple moving average on your charts, daily simple moving, and not using exponential, just daily simple moving average. When the chart, when they start to get around that 20-day simple, they could get a little choppy, but that's the first key simple moving average. That if you do lose that and you lose it with any kind of strength, then I'll give you an example. Is it okay if I skip around for just one?
Yeah, go ahead.
JP Morgan, best of breed bank, if you will. When you do lose one, and this was case study number 1 for one of our early breakouts, banks, I think, will give you the first clue. They were the first cohort, if you will, to give you that breakout as a group, as a collective in that last earnings season. This one is looking pretty weak. The simple moving averages are getting really tight, right? So 20-day, 50-day, as price might start to chop here, you may get a pretty violent move to the downside on JP Morgan, especially that it's actually had and it doesn't usually move that much. So all I'm saying, you could sell some cover calls, whatever. But this would be one that I currently have on a very heavy watch for a possible downside move. We absolutely have this existing look above and fail both on a monthly time frame, and now losing the 20-day simple, and right in the middle of that prior week range. I think this, if it does get any lower, losing this balance zone, it's been very resilient. But if this consolidates and then slowly breaks, this would be one where, hey, look, when we were talking about this down here as one of those patient zeros of a high and tight, massive consolidation from the initial breakout zone, this is way over here, having this massive area that it actually broke out up to, right? This is big breakout. That's a huge move. And now we're basically talking about retracing a lot of that. So this was that. This is the June extensions. If we do retrace some of this stuff, it's not too crazy to talk about possibly having some kind of retracement into these areas after having large runs in the last month or so. So this would be, these kind of moves would actually look like this overall.
So speaking of banks, can we do SOFI? Do you see some of the same patterns in that one?
Well, so I'm thinking, so if near-term rates actually come down, that's not super bullish for the big banks, right? Like net interest income actually is not very myopically. It doesn't usually bode well for them. It's maybe inverse thinking, but it's not usually a good thing. So basic, it is crashing. It's not crashing. Get out of here. I'm not touching my hoodie.
I'm not touching my hoodie either.
Did you tell them about our Reddit?
Oh, we'll talk about Reddit in a bit.
Oh,
I told them. I told them be ready for Jason. He's going to talk about.
No, I'm not. Well, I'll tell them what we did. But
I think SOFI holding 22, 23 is. I don't see this thing going back to 15.
15?
Yeah.
Okay. Can we talk? Can we just Can we back the truck up here? We can't talk about the kind of stuff right now because it's way too early to be thinking of like crashes.
I agree.
Right.
That's what I can't see that happening. Like
no. We are if we have little pullbacks, like that we're just talking about like, okay. So for me, the way this is going to work is like we might have some short-term pullbacks, and then when that happens, the stocks will go sideways.
Yeah. And
what I'm not going to do is I'm not going to get in the way of a short-term pullback immediately. Like I'm going to wait till we start to go sideways, and then I'll look for the investors to come back in, if this makes sense, which means that I'm not going to try and step in front of I'm not going to try if knives start falling, I'm not going to start catching them immediately. I need to let the dust settle. What I know to be true also is that we are not going up right now. So I don't really even need to think about where things going to bottom out. Like it's way too early for me to start thinking about that right now. Here we have a pretty decent balance. This is 2160, and that's that weekly low. So I think that's what you see, at least in near term, 2137 right in here. We know for sure it's not going higher right now. If you are over 25, boom, we're going back to the upside. It is what it is. Total fake out. We are just going higher. End of story. No puts on the board. This is just going higher. It is what it is. Deal with it. That's how it's going to work. But underneath 25, it's got some retracement to do. So the monthly candle, that's literally this it, right? I have some confluence right around 21.25. The weekly low, last week's low lines me up. So this gives me a little bit of confluence just underneath 21.25. And the downside bottom end of that range is actually 20 even, which at that point in time will probably line up to the 50-day simple right there. And this is going to be the 20-day simple. And that's worst case scenario. Is this a breakdown? Like, I don't know. Like, that's going to look like this, which means, by the way, okay, this is the same thing we just basically outlined on Palantir. Okay, we might have some kind of liquidity grab event down here. But at the same time, like, dude, I'm not really going to know that I'm in the clear till I'm back over 22.5. So all this said is that if we do go down, cool, I'm going to need to look. There might be some events, but this is a week or two before I can really start looking at where is this actually going to happen. I can plan it out, but this is at best an educated guess. But it's not real. Nothing's really going to be solidified till I can get this, which is multi-weeks, possibly out in range, unless there's like a V, right? Which, anyways, that's still going to be at the same point. Which maybe that happens, but either way, it's still, whether this is weeks or days, it's still in the same spot. Hopefully, this helps. Is it helpful?
No, it's very helpful. I think it's fair. It's very similar to the chart patterns that we're looking at some of the other stocks. Can we do Rocket Lab? Because I think that one might be slightly similar as well. This one gave up 53. It's barely holding the 40s. Pumped to 47 on earnings, and now it's kind of right back down to 40.
Where's Matt? What's Matt's?
Matt, are you in the chat? Well, Matt would say he's buying more, dude. The beautiful thing about Matt is
Matt's like, I'm every day DCA.
He is so genuinely long-term. He laughs when people, he's been in this thing since $4, so he has zero sympathy for anyone.
Yeah. You remember though, remember there was like, I was like, well, two stocks, if we're going to do the 10X in 10 years, it was Rocket Lab and Rivian.
Yeah.
He didn't like my Rivian. Hasn't really worked out. Rocket Lab was the other one. It didn't even take 10 years.
And it's that's right.
But it was
that was when Rocket Lab was like, I think like $7 or $8. Yeah, that was
very close. Good enough for government work, I guess. I try.
Okay, so how are you? Do you think this also has some liquidity grabs set up, or how are you thinking of this? Because it feels like it's been a downtrend for the past month and a half.
Really?
Well, I mean, from 50 to 40. Every attempt it made to pop up above 45 got rejected.
Dude, you have like very short-term memory. It's barely half of this last month's range right now.
So what would you characterize as a downtrend then? I guess what's the technical definition?
So it's not in a downtrend right now. Just say.
Are you using the moving averages to make that or?
No, I mean it's barely it just lost to 20 a couple days ago, like a couple weeks ago. I mean, if I were to be like, oh, okay, like I guess it depends. If I were to say trend, I would probably use like a weekly and say, okay, it could come down to, and this is actually probably where I was going to go, is I was going to go somewhere around 37s. And that would still probably hold a trend, an uptrend, quite frankly, longer term. Like this would be your trend. Like if I took all my drawings off.
So if it's not in a
37 is like June high, 37.50.
Yeah. I guess you would say it's consolidating then. It's not an uptrend or a downtrend. It's more
well, today is the first day it broke. Today is the first day it broke trend or broke consolidation with some strength, but so if we zoom in a little bit, so I'll use a 30-minute to see this. The bears on Rocket Lab have been really trying to break this guy. And I mean, they've been trying real hard for a very long time, and they have been failing up until today for 21 days. Like the bears have been sucking really bad on Rocket Lab. So they tried 1, 2, 3, 4, 5, 6, 7 days to break this 42.85 level. This, by the way, is a fib retrace. So this is 50% of this monthly candle. And if you lose a 50% drawdown, like 50% level, the odds of you getting to this 65 retracement is like 70%. So that's a lot of tries. 1, 2, 3, 4, 5, 6, 7, 8 tries. Okay. So kudos, bears. It only took you 9 tries. Then this try number 9 started way up here, 46. I mean, so okay. It took them forever, dude. Like, so like these bears, I don't know if I would even give them kudos for that. but anyway,
it broke trend on a day where all high beta broke trend.
Yeah. So like, I don't know about all this, dude. And even at this point, like, all right, well, we're coming down into this. So like we're coming down into another balance zone. And we're going to test this quarterly. So maybe you give it a little bit. I think what's more important about how far it comes down is just like the rest of those charts that I was saying, is like, it's more important than trying to catch a falling knife. If it does start to break range, it's Rocket Lab. We know it can be pretty violent. What's more important is like, what does this recovery look like if they do get interest? Because with Rocket Lab, look, you could look like this in the pre-market, and then by the afternoon, it can look like that, right? Like we've seen that. We've seen that more times than not. So it's about this 43 level. So I would say this 37 to 35, we have for sure seen this. It's this shenanigans. Does it have this kind of personality anymore? I don't know. I don't think it can have that. I don't think it does have that kind of personality. That kind of personality, last time I saw that was like in the 16s. here. The last time I saw that was this, where you have a day where you just gap completely down and you think that, oh, it's going down. By the end of the day, you look back and you're like, dude, this thing was $14 when I looked at it last and it closed at 18 and you just moved on Rocket Lab. What? 28% intraday. Do you remember these days?
Oh, I remember. I was there.
This is how Rocket Lab used to trade. And I mean, we're talking about April, 4 months ago, 20% in a day. So it's nice to see, even though this is a big move, it is nice to see, like, okay, first of all, it took them 10 tries to move Rocket Lab 11%. But that said, this is 11%. This thing used to move 20% a day. It's part of the maturing process if it's going to have it. But I wouldn't write it off that fast, I think is my point in saying all this stuff. I think maybe around 35s, that's where I would maybe start to look again. But what's more important is to see, how does this mature as an asset, and do the investors come back in, and does this start to level out, and does this continue to have the beta that it used to, meaning do we continue to see 10-20% days, or does the beta subside a little bit and maybe this gets a little alpha? And that would be more interesting to me.
Right. Can we do AMD?
Ooh. So AMD, this one, I had this last Tuesday. I was looking for 200. We knew that 180s was going to be a big deal. This was right into that level. And then we locked a lower high the very following day. This move, I think it was, because this was Tuesday, right here, Tuesday close. This move was big, and I think it was a little bit too big. I wasn't looking for a 7% move on AMD the very following day. So I actually, in our group, we took down the majority of this, looking for a small pullback, because this overnight move, one, I thought that the overnight move, just from a price action perspective on AMD that very following Wednesday morning, was a little aggressive. And then two, the reason that it happened, I wasn't a big fan of. I don't know if you remember this, but we covered this on TT, but it was because of it was NVIDIA chips getting delayed, which I didn't think was going to be legit. And I'm like, there's probably a little overcompensation here on AMD's move. So take majority down. Let's look for a small pullback, which might end up being here. But the next day I'm looking at this, volatility was just way too hot. And so as an options trader, I know, like, even if this goes sideways, which it was down to sideways, I'm like, even if this pops up a little bit, the way this is looking, that's still not going to be good enough. So I just closed it and I'll look for a second entry. I never got my second entry. Luckily I closed day two, but I didn't even look at this. This is the first time I'm looking at it since. That is no fun. 20-day losing today. I think this is getting a little carry through. This market is not. What happened today, dude? Was there some news? I missed half the day.
Dude, you and a lot of other people are asking. I think genuinely it's the fear of Powell not confirming the rate cut and the market saying we want to get defensive, we want to sell off high beta. I cannot find another macro or geopolitical reason to explain today's price action. That's it. That's the best I've got. I mean,
what time are the minutes released tomorrow?
Yeah, you do have Fed minutes tomorrow, but I think it's Powell, dude. Like all these high beta names dump 5% at the same time. Like there's got to be something underlying there, and I feel like that's fear of Powell.
Yeah, I think that these set up for profit taking for sure, and then people realize that we have NVIDIA earnings Like,
I would be surprised
wow.
if this is a fake out. Yeah, if this is a head fake.
Yeah, I would not be surprised if this is a fake out. Does that mean that we get bought up tomorrow? Actually, no. I think that the biggest market moving event of the week is Friday. To your point, when Powell speaks, I will say that it's Friday. And if we have a slow grind lower for Wednesday, Thursday, just because we've been in a bull market for so long, maybe the audience doesn't know this. But on Fridays also, if we do get a huge move to the upside, I would not get too euphoric either. Because in bear markets, Fridays tend to be very green. There are a lot of short covering rallies in bear markets that happen late Thursday into Friday. And also that carries through over a little bit to Monday morning. By Tuesday afternoon, you really see what's kind of like real. So I just be a little cautious of that. You'd want to see a little bit follow through, but I think the market is kind of waiting for this Jackson Hole event.
Okay.
We don't have any other data really. Housing data was good. I still think home builders are probably your best. Housing numbers were good today. Really good.
They're very good. Buffett's going long, home builders. I mean, there are pockets of opportunity.
I'm going long. I think, Amit still makes fun of me for my, $8,000 stock that used to be $4,000, $5,000, but it is what it is. Doesn't trade options on it, but
Okay, so AMD, you kind of see it like NVIDIA, same downtrend.
Yeah, but just, I would say look, it's not a lower low. The low is here.
Right.
157.
Right.
That has to get lost. So right now it could go into some kind of, it's a double top. I will give you that. It's a double top. Technically, it's even a higher high, but I'll give you at least a double top, Mr. Bear.
Okay.
I'll give you a double top.
Can we do HIMS?
So Buff, I'm interested to look at this one. Let's see. Ooh, high beta. Didn't have it. It's a funky looking.
This is the definition of high beta. This is the most volatile stock in the market, I think. I don't have the exact numbers for it, but I feel like it is.
Well, it's probably the currently most volatile stock that you own.
Dude, it was at 65 last week. It went down to 53 in like 2 hours. I mean, all these Novo FDA headlines just take it up and down at the same time. So 42, I mean, you think there's support at 35, 36, like below 40 would be
my line. Are you looking at the answers because the line is there?
Yeah, the line's exactly there.
That's where it is.
This is below 10 billion now. If it goes below 9 billion, I mean, given its growth, that would be pretty incredible.
No, dude, market stays irrational longer than we stay liquid, right? It's a saying for a reason. Sometimes we get like really good discounts, who knows? But this is, if you, the thing is like, okay, there may be people out there looking at this and be like, oh, this could be a really cool possible, I don't know what you would want to call this, like double bottom chart pattern. This is not a double bottom. This is a double bottom. I don't know, this is triple bottom. But so you got 1, 2, that would be 3. What's very likely to happen, see this red line? That's a 200-day simple moving average. I'll give you a little trick of the trade. If I do like to use my simple moving averages, what we happen to see a lot is you might let this breach. People say wait till it's above, comfortably above your simple moving averages. I don't know about all that, but you might let this breach and it might get here. Wait for this. You're going to get a break of structure. Break of structure means that you have a higher high. So you have a high and then you have a higher high. 1 there. And then after you have that, you have to go, you'll have a higher daily low. But really, without getting really in the weeds, that's the best way for me to explain that. on the fly, but it's right there. It looks like this right there. Your simple moving average, your 200-day, will actually still be above it. But it'll look something like that. But you need to wait for that kind of a little consolidation. You'll end up seeing like a little blip over it. If you're in our groups, then you'll probably catch something like that. But basically, it's a daily higher low. Higher low is more important than a high. Like, you need a higher high, and then you need a higher low, and it'll be below a significant simple moving average. Like this is a daily higher low after the breaker structure. It's here. Boom.
Okay.
Higher low. Higher low.
Can we do BMNR? I don't know if there's any TA, but
For sure there's
all of ETH, but like, how are you thinking of it, I guess? Also, are you in this or no?
Not at the moment. So how much can you remind me, how much did he file to raise?
24 billion.
With a B?
Correct.
With a B?
Correct.
Dude.
They have 6 billion on the balance sheet. The company's worth like 8.5.
Dude, Mr. Lee is not messing around.
He is not. You know, I had a dream about him yesterday.
Excuse me?
Did I start?
I don't think you did.
Dude, we were like talking about stocks in the cafeteria. It was weird, but yeah. I don't know what to think of. I don't know what to make of that, but
26 billion?
24.
24 billion. What was the last raise for?
2 billion. Well, there was one raise of 4, and then on Friday last week it was 20, so 24.
Okay, but it was just a filing to be able to.
It was a shelf offering, yeah.
No. He did a shelf offering?
Yeah, meaning he hasn't dumped the 20 billion, but he has the capacity to dilute up to 24 billion whenever.
Right. But they haven't pulled the trigger.
Yeah, they have not.
Yeah, and they're not going to pull the trigger all at once. There's no way.
Yeah, that would just destroy them.
That's crazy. So I think there's a little hesitation. So I have this weird feeling that the market's kind of waiting for some of that to come out. It's probably going to be in tranches. I didn't realize it was 24 billion with a B. That's interesting. So for me, it was 54 at the weekly level, but because ETH is a bit precarious, it's in a bit of a precarious spot. It's all the same kind of situation. The trading range was 70 to 55. That comes from a lot of different places, but just that last weekly candle. The second that it lost, and to me, because they hadn't done the shelf offering, I was thinking, well, maybe it'll rally back up to 70, right? Because there still was no shelf offering. But watching this go up ski last week, I'm like, this, boom. The second that it didn't get through 70, we have that same exact setup, what we call that look above and fail. So I knew, my team, our crew was told, at least warned, hey, look, we're probably at least going to 54. The second that we didn't follow through over that 70 this day. We get to 54 and it's like, okay, so the question becomes, do we bounce? Well, we'll see. And we actually, I say we, so we had considered doing some kind of a straddle at 55, right? Meaning like, do we go long 65 calls and $50 puts at the same time? But what we have to have is you have to have a large move. BMNR is one that will have a large move, but do we get it right away? Today you get it. And this range here takes us back to the prior breakdown of that last shelf offering. What size was this shelf offering on Monday the 28th or over the weekend on the 28th? Do you remember?
For BMNR?
Mm-hmm.
There's 20 billion.
They did 20 billion.
Oh, you mean like what did they actually dilute on
yes.
over the week? They bought around, I think it was like 400 million. They bought 130 million of ETH in one go and then another 2. Yeah, so around 400 million, if I'm not wrong.
Okay, so 400 million. It's a 30% drop.
Yeah.
All right. So I have this. So my point is that I feel like people are very much interested into this concept and probably very much interested in Tom Lee. And if you have interest in something like this, this is very probably the one that you would want to back. If you're just looking at a chart perspective, you would say, hey, look, 38 or as close to 40, just from a chart perspective, is where you want to be. As close to 40 as you can. Maybe slightly undercut that. You get a dilution event or you get a shelf offering, I would say this might happen after hours. You probably see that $30 in a flash. And that may, just from a technical perspective, you probably see something like this, but a shelf offering, I think gets bought up fast.
Well, I think so too, because people love Tom Lee.
Yeah, and I think the reason you're not seeing any price action here is because I think people know they're going to get that, dude.
I think so. I'm one of those people that wants to buy, but I don't want to get diluted.
So that is exactly what I'm saying. And so I think people know there's a shelf offering coming and they're just holding out and you're not getting any follow through here. So you're going to bleed out a little bit, but as reverse, like as weird as that sounds like, I think that when you get that shelf offering, the stock might just rocket. and it might be somewhere around 40 or possibly 30.
Right.
But it's probably, and I think that he probably sticks with the same tranche, like, 400 million. But, and knowing that there's $40 billion of shelf offerings available, and he's done about 400 million so far. Well, he's gotten about 10% out. He might not do it for a while. And it's weird because, like, if Ethereum goes on a run, what I was watching like this whole time, even up here, it's like every day that week that BMNR did not like pull the trigger, it would dip intraday because they're like, oh, it might come out, but then like the morning of, it would just rally up again, and then at the end of the day it would like sell off, or middle of the day it would sell off, and then there was no offering, cool, we'll rally up again, and then it would start to sell off. Very weird price action, but today nobody kind of showed up here. So I think as close to 40 as you can. And if you do get that dilution event, especially if you're down here, you probably see that flash, maybe 35s, something like that.
Okay, can we do UNH? Because this one is confusing. I don't know why it didn't run with the rest of the value stocks today.
You don't know why it didn't run with the rest of what stocks?
Like the value names, the Caterpillars, the Home Depots, like you would think.
It already ran.
Well, after the Buffett thing, but it didn't have any legs after.
13F season. It'll have legs. Once UNH is over 325, it'll have legs. But it's still in the same box that has been in since we started charting this. You know this. We were charting this in the same levels. It's still in the same box.
No, that's fair. But my point is, on a day when Reddit seems expensive, people should be piling into defensives and healthcare. And UNH, they did not. They sold it today.
Well, to be fair, it just had a 10, 13% pop.
I get it, but then to me, today was a layup for it to keep going. You know, and to be fair, after the 10% pop is after a 50% drawdown. So I don't know. It was just confusing to me.
So
it didn't participate.
As it has been, as it was, and as it always will be, UNH is not going up until it's firmly over 326s. My levels have been the same, will be the same, and continue to be the same on UNH. Love you guys, but also Tuesday we did say over 250. All of a sudden, pre-Buffett, this had stopped going down.
Right. I mean, that's true.
But but you're now back in the range. So you're right back to where it was when the chat first started asking me. Damn. Ooh, sorry.
Well,
That kind of sucks. That's cool, but not cool at the same time.
What's cool? But not cool?
It's cool, but not cool. Like it's cool because it bounced really big, but not cool because it's actually at the same spot. I just noticed it's at the same spot that the chat has been asking about it.
Oh, you're right. Yeah.
Did you notice that?
Well, it bounced from 237, which yeah, it's a good bounce, but like 237 was disgusting.
But this is the same level that
everyone's been. Yeah, 100%.
Wow. I mean, it feels so. Wow.
By the way, guys, you do have some names after hours, particularly Palantir. CoreWeave's getting hit. Rocket Lab's getting hit. Bitmine's getting hit. Palantir's down another 2%. SOFI's getting hit. NVIDIA's getting hit a little bit. S&P's flat and Hood is flat. But everything else is definitely after hours getting sold off.
Who upgraded Hood today? Was it Hood today?
My guy, Bernstein.
Bernstein?
Yeah, I met him at the event. He's been one of like the top 3 bullish analysts on Hood.
I saw that 160 come out.
Yeah, he's
150 or 160?
160.
Yeah. All right. Why can't they just look ahead 10 years like the rest of us?
Yeah, exactly. Can we do... All right, guys, now you can start putting tickers because I think we did all the big ones. Please do not spam. Just put it in once. And again, if you spam, like, you might get banned, bro. Like the spam, like just like this, we cannot have
You're not going to ban your
I'm not going to ban, but my mods do. You cannot spam a ticker 15 times. Like it's just the easiest way to get, like, it just ruins the chat. So just please put a ticker and I will try to get to as many. Okay, I see Lulu a lot. So let's do Lulu.
Oh, I thought I got a pick. Let me do one pick.
Oh, all right, do Reddit. Do Reddit, then we'll do Lulu.
All right,
Tesla. We'll do Tesla after. We got to do that.
Amit texted me the other day, you guys. It was so hilarious. He's like, dude, remember when I told you to buy Reddit at 115? And I'm like, really, dude? I was like, I should have held, bro. And then I looked at the stock and I was like, you were right, man. And I hadn't looked at it since.
And then you had a revenge trade.
And I said, wait, can you show them the text?
Yeah, show them.
No, can you show them? Because I don't think this camera doesn't have the zoom. But it was so funny.
He said, hey, remember that time I told you to buy Reddit at 115? And I started laughing.
You reversed it. I was telling them a lie. Now you're telling them the truth.
Well, because I got to tell them the truth. Yeah, I didn't say you were the one who was right about this, not me. And so he said, I'm about to short this B out of spite, bruh. Why do you talk like that? I'm about to short this B, capital B, out of spite, bruh. LOLs. Who types like this, bro?
Stop it.
No, who types like that? You're a grown man. What is this?
Stop it.
LOL with a Z?
No, but I hadn't looked at this. Since we were like 115. But I think there's an interesting setup.
Okay,
so like,
hold on. Did you short it?
Yeah.
And did you close the short?
No.
Oh wow.
Well, some of it. Well, I rolled.
Okay, so you think it's going down further then?
I want to explain something though. So today, or yesterday, part of it was, hey, look, we have a huge move. I mean, this is just a massive move. And I was jokingly out of spite the only people that talk like that are people that are joking. Thank you very much. Unserious people.
I'm gonna wait till you talk like that again, and we'll expose you again.
I only talk like that.
I'm about to short this B, bruh. LOL.
That's exactly with that exact accent.
Are you afraid to say the B word? Like, goodness, dude.
Yeah, I don't say that. Not in real life. I have a son. But I was looking at this.
Messages?
I know. We like this is called like power earnings gap. Other people call them PEG, whatever. Power earnings gap. Big move. And yeah, it was good from like 115. That was probably a really good buy. Honestly, it had made a lot of moves into 150s and it started to pull back. And post earnings, I had not even looked at it since. And I looked at it and I was like, oh my goodness, 250? That's insane. And then I look back and I look at this. When you see something like this, and I'm just going to explain a concept, so hopefully I don't take too much time, but you explaining this concept is like from 150 cool. You have this pullback, you have this big move. It all happens like overnight, right after this earnings. And so just to explain this, essentially you have people that are in from a lot of this 115 move, and we might have this situation overall. And this is a concept. Let me just get this out. So people, if you imagine who's in this trade right now, who's in this trade, maybe Amit's in this trade, he's in at 140. If he's like late to the game, he's in at 140. If he's early, he's in at 150. But if he's late to the game, he's in somewhere around the 140s. And right now we're at 250. He's up hot. Like he's in really good. What I've just did is I've put something here called a stop loss. Sometimes people that trade, they use these things called stop losses. If you don't know what a stop loss is, it's basically if something goes, or trailing stop, if something goes down beyond a certain range, it closes out their order, especially if you're an equity trader. And so you hit a good one. He's on a roll. He's hot. He doesn't want to lose his money. It's come very quick, very suddenly. And so as the stock starts to go up, what happens is he moves his stop loss up every day, little bit by little bit. And he's beside himself. He's like, I have caught a good fish. It's continuing to go every day. It keeps going up, keeps going up. Keeps going up. And what happens is that he keeps moving his stop loss. This might be on a lot of shares, up and up and up every day. And he keeps moving these up. And so what I've done is just painted you a picture of like, this might be where we are. And if you could see, if you've ever heard the term running the stops, right? This is like a visual of what happens. Like when people start running stops, is that you get a very waterfall-like price action of, if you can imagine all of these people that have these stop loss orders, each one of these trigger an event when you have this. It's not this big move. It's actually this that is dangerous. It's this very clean staircase price action that's very clean and orderly, that is in fact very dangerous. So when you see this, this is dangerous, because what this creates is the ability for someone to just easily say, well, let me just move my stop up.
Right.
And so what happens here is that when you have this first day, and this first day, then we have what we call a pre-market low. You close right at your pre-market low. That was why to take a short, just near term. You start to run stops. Run stops as in like every time someone's stop loss is triggered, you create a selling event. That person sold. Well, that person then moves their other stop losses up. And each one of these people now, okay, it's starting to come out. What are they doing? They're all moving their stop loss orders up. They've all just done that. They literally all just moved their stop loss orders up. And so if this continues like really like anymore,
you get a chain reaction of just tons of stuff.
Bingo. You get a chain reaction. And so like if this comes, you run the stops, and why something like Reddit can sometimes create this like, even if it doesn't go higher, whoosh, whoosh, you get the whole thing taken out in a single session.
Right.
So just be careful. You don't have to actually sell, but this is a moment in time where actually options become a better play than equity, quite frankly. Because if you sell, you have to take short-term taxes, which maybe you could use, but if you want to offset that, sometimes options will actually pay you better if you get that very quick movement, and hedge stock even better because they'll pay out faster and more.
Okay.
Sorry,
so Jason, let's do 5 quick ones, literally of 2 minutes each, and then we'll do Tesla. Because I know.
Sorry, so that was a little bit of learning, teachable moment. Done.
Let's do 5 quick ones, then we'll do Tesla. Nebius, thoughts on this one?
NBIS. Let's take a look. Probably in the same situation. It held somewhat. So it's sitting on last week's low. So you don't want this to lose really like this moment. So this moment here, this is 66.5, similar kind of situation. If it loses that in strength, so let's say NBIS opens up down and then rejects, okay, that is a little bit sketchy. That's about 65. Then that could be a pivot. But if it opens up and reclaims 68, that is all good. You're still back in range. You're a happy camper.
Okay, Oscar.
So having Buffett buy UNH, not just Buffett, but everybody, I think changes the market sentiment. Market sentiment overall is important to note. I think Oscar could be good here because the sentiment, if high beta gets a pullback, healthcare can come back into favor, giving things like Merck, even Pfizer, whatever, a bit of an underlying bid. This one has broken structure upside, holding actually fairly well. I like 16s, but I would not be surprised if this one just takes off tomorrow also. If it gets over 1680, this market sentiment in healthcare, not biotech, very different, may be changing overall. So if this holds over, I call it definitely if it holds over 17s, that's pretty bullish here. Otherwise, I'd be still watching these pullback ranges around the 15s.
Okay, CoreWeave. They had a big
if it's back over 101, it's better, but I think some fear for sure about the lockup unlocking definitely needs to get over. This is not unless it's over 105, like untouchable. End of story. Unless it's over 105.
I agree. Okay, two more before Tesla. LULU.
Ramon. Why you like this?
I don't like this, bro, but social media.
I think I gave you this. Did I give you that trade? I told you it's going to have a little pre-earnings bounce to like 2 something. You got it.
You did say that.
Trade complete. Done. She failed. It's over. It's a wrap. That's all you got. Yeah, but you can't go any lower. Otherwise, she's back on the downtrend. Yeah, but this has to get back over. It has to reclaim 200. Otherwise, you are at risk of having another. You're at risk here. I would not. Ooh, is that a monthly? Yeah. I would actually wait till you're over 210 before I played with this guy. Like till I saw that high breach now. Wouldn't touch it personally.
Okay, last one before Tessie, SBET.
I mean, SBET or BMNR.
Yeah, same kind of situation to an extent.
I mean, same logic. I'm sure that if you could figure out who trades at a bigger discount to NAV at any given time, you could have an argument for one over the other. But if you factor in the yield, if you don't want to do that math, then you can say who has the X factor, and that is Tom Lee, and that is BMNR. Other than that, there's probably going to be a discount to NAV factor that you could apply. I'm sure of it.
Okay, before Tessie, just real quick, Jason's Twitter right there in the chat. Everyone can please make sure to follow him, subscribe, all of his updates. He puts out some free alpha on his Twitter as well. A lot of trades before he takes them for people to see. He also has a Discord and his private links in his Twitter. So everyone can check that out. I'll also link his YouTube where he does a stream every Monday. I'll link that as well. Okay, Tessie, what are we thinking about this one?
So Tesla needed to hold 335. There's in our stream, we have so they released a new model, what's it called? The AY today?
The Model YL. It's the China larger.
YL. Oh, China, whatever. It's not over 335. In trading, trading is not investing. It's very different. In trading, we have this concept, and I hate to use it here. We have the concept called a lifeline, and we may have gotten 2 of them, but what I have to be crystal clear on here is that it's not over the all clear sign. So it's not in the clear. To me, this is a longer term trade, meaning like it has to be months out there. So can you be patient with it from a couple different ways? For sure. But to be crystal clear, it's not for sure happening by any means, unless you're well over that range. I would say 338 at this point. That's that monthly high. That's this yellow line instead of 335, but like 338 if you want to be a little bit better, and definitely for sure if we're over 350. But we're not over either of these. Yeah, it's bounced a couple times. The concept that I use here is we call it a lifeline, and in trading it's super important. And I've sent this video a couple times, like once in my stream, in our chat. I haven't posted it because I don't know that it's a bad trade, really. But what is true, it's not a short-term trade, and you can't be thinking this in any kind of short-term way at all. And it's not happening right now. So a lifeline is like, okay, we were hovering over key levels right here. And then we broke down. What I'm telling you is that we broke down, and this is off the table in near term. This is off the table. And you have gotten what we call a lifeline once, not once, but twice, because this trade is not happening right now. And a lifeline means like if you were on a ship that was cruising along, and you were now thrown overboard, you were flailing in the water, someone threw you a life preserver, it's called a lifeline, and that looks like the form of you bouncing back up to your stop loss or your trigger zone, and you're slightly under break even. You might even be just barely green, but then it gets rejected. And then it does it again, and it gets rejected here. If it happens again, it's probably going to do the same thing. This is a lifeline. You've been throwing a life preserver. It's up to you to take it. If you're if you're in any kind of flavor of a near-term option, get the frick out, because this ain't happening right now. But that said, near term, it's still long term. It's still very much consolidation. So what I will say is that volatility is, I don't know if you track this stuff, it's extremely low, which makes it very interesting. It's actually
it was at 15 today.
Tesla's volatility is in the first percentile, which first, this is as low, this is as cheap gets. So like if there was ever a time to buy Tesla leaps, this is probably that time to accumulate it. When we talk about leaps, this is like sitting down at a blackjack. Leaps are the most sensitive the most sensitive options to volatility. Like they are the most sensitive to volatility, period, hands down. But you also have to get your direction right. Just because you could get paid out more doesn't mean that they can continue to go lower in terms of IV. My analogy to our crew is like, it's like sitting down on a blackjack table. If I get the direction right, I could get paid out 10 to 1 instead of getting paid out 1.5 to 1. But if I don't get the direction right, I am sitting down at a blackjack table that's going to pay me out a lot better, but I got a really cold dealer right now. The dealer's cold. I'm still not making any money. Right. So that said, look, I need to get this direction right. And right now I don't have it. Can it base out and chop like this? I think that's your best bet. So does that mean that we still have like some work to do? Can we get this liquidity? For sure. But dude, that could be a really long road, like a really long road. And I do not want to sit in any kind of short dated anything, even if volatility is cheap in the near term. So I need to see that structure. Why these levels are so important is because over this 338, that's when volatility will start to expand. Actually, really, it's this 350. If we can get to here, for sure we get there. If we can get over 350, this is a very thin structure on Tesla. That $40, 350 to like 390, that would happen extremely fast. And this definitively is when vol will absolutely increase. But if we lose 318, which is a ways down there, like this is your balance zone, you will get an increase in IV. It's just not going to be in the right direction.
It's also so far it's been, I mean, like people would say Tesla should be like well below 250 by now with the earning, right? Like with the earnings but I mean, the fact that it's, I mean, I don't know if it holds 330, but the fact that it's kind of doing it on a day like this
is encouraging, but they also have some news, right? Like, but what I will say is like, we have the same setup as the rest of the market right now. This yellow line, we have a look above and fail on the monthly. Thankfully, Tesla has given us two lifelines, right? 1, 2, right? So at least my crew knows, like, hey, look, you've been given the life preserver. It's up to you to take it. One was just as early as today. Where actually, I'm pretty sure like a lot of people were probably green on this trade if there was a trade. But we're not over that balance zone right here. I like the trade. Is it invalidated? Well, it's not validated. Is it going down here? Unlike a lot of the rest of the market, it hasn't gone down on the week. That's below 325. If this loses this 325 level, oh yeah, we're going down, right? And that's the 320, and we are sitting on it, right? So we just close on it. We might open below it tomorrow. Looks like we opened right there, but you don't really want to lose that, because then you have this simple moving average order, like this cluster of them. We could just all of a sudden, where we were talking about expansion to the upside, this is how fast and fickle the Stephen market is. We were just talking about as long as price is staying above these simple moving averages, well, then these would be expanding to the upside. Look, if price just decides to go this way, I guess we could be talking about Tesla expanding to the downside. I guess so. I have to be open to that. That again would be ways away. But why, when we talk about trading, we talk about having stop losses, and we have to talk about having areas that our trades are confirmed or invalidated, like levels at which our thesis, if you will, are, you have to be open-minded to not being right. And this is where I have to be open-minded to really, I might not be right. So it's right there. I'm at the level where, you know what? I could be wrong. It's very close. I'm on the edge. Not making it easy, Tessie. She's not making it easy.
So you're not long or short. You're kind of just waiting.
No, I'm long, but I'm long very small. I was longer. I'm long equity. I'll always be long equity. I'm long March calls, and I'm not long anything other than March calls.
Okay.
But below here, I know those got to go in the dumpster for sure.
Okay, let's do a couple more quick ones, and then we'll get into one that'll take a little bit more time. MRVL, thoughts on that one?
So AMAT just destroyed this space for sure.
Yeah.
By the way, AMAT, talk to Tony, like the manufacturing, AMAT, nobody really wants to. AMAT is to, what category would you put AMAT in?
Semiconductors.
Kind of semi, but like they're a manufacturer. They legitimately manufacture.
Well, yeah, earnings, they said tariffs are going to screw them, basically.
Well, they're a legitimate manufacturer. So like AMAT is to semis as Fortinet is to information security.
Right.
So AMAT is probably not the one that you want to compare the sector of semis.
Agreed.
Like you really don't. So how Fortinet took down Palo Alto Networks, CrowdStrike, and everybody else, which it really shouldn't have because they're kind of in a different lower league. AMAT is very much, I think, like that. So we might be seeing a lot of AMAT might be a reason why we're seeing AMD down. AMAT might be a reason why we're seeing a lot of this stuff happen. Quite frankly, I think that could be one other straw on the camel's back. Definitely for MRVL, because this happened on the day of AMAT. Because I have MRVL, and I'll tell you that much for sure. The best in the space is KLA, right? If it was KLA, AMAT, LRCX, these are three direct competitors of the type of semis. If you're going to put them in semis, it's not AMD, it's KLA, LRCX, Lam Research, and AMAT. These all three directly compete with each other. That's it, right? Everything else, MRVL is a designer, right? They're not manufacturing. I think someone just put it in there. AMAT supplies equipment, services, and software for the manufacturing chips, but they actually like manufacture.
Well, they were the only semi so far that actually said that the tariffs are creating, they called it general economic uncertainty, I think is the exact wording.
Right. But AMAT always does this.
Yeah. And so
the first day, 188, AMAT always does this. KLA. Yeah, same thing. KLA is best of breed here.
Okay, so let's do another two quick ones. Grab.
Sorry. We're right. Move me on. Grab $5. Still doing this thing. I think international exposure. I don't think
I actually really do like internationally. Like if the US is screwed right now, I mean Singapore should be okay. Malaysia should be okay. They have their own issues.
The US is screwed, but I think it's
not
TBD.
screwed, but I'm saying if like tech stocks in the United States are going to take a breather, obviously the algos could dump Grab, but like the Grab's business in Malaysia and Cambodia shouldn't be affected.
Agreed. So if there was a time that you do want to maybe like diversify a little bit, this is probably a moment that you do take a stab at those kind of things. I would still say 480s, 490s, unless just $5 right here, right now. Grab takes a stand, Amit cashes out everything, takes all of his extra cash and dumps it right in at a $5 flat and holds it like a brick wall. I don't know. He's got enough bricks in that wall. I hear he's tearing it down. But we'll see. I don't know that $5 ends up being an actual brick wall.
Okay, I think that's fair. It's basically stuck at 5, and hopefully it stays actually above 5. I would be happy with that.
I did help the one day.
Open door.
Dude, I actually is embarrassed.
Went long. You finally went long. Yes.
No. God, no. I confused this stock for Nextdoor. I thought Open Door was Nextdoor. I didn't even know what this stock was.
Nextdoor is a neighborhood social network.
Oh, I know what Nextdoor is, and I thought that's what Open was.
You didn't know they buy and sell houses?
No, I thought it was Nextdoor. I thought this was Sarah's company. Legitimately, I thought this was Sarah Fryer's company that she left.
It is a business model that has just not worked for 5 years.
I know. What a loser.
But you've seen the pumping on social. You've seen these like communities.
Yeah.
Form, like,
so what is this, a rate play? I don't know. Why would you Zillow over? Why would you Open Door over Zillow?
I am asking the same. Like the person who's advocating for it yesterday said it could become a marketplace for homes. I'm like, that is Zillow.
Yeah,
I don't understand what a marketplace means.
I didn't even know that Open Door sold. I thought it was Nextdoor, and I do stocks for a living.
No,
that's embarrassing to me.
And it's not an easy business.
I am embarrassed. I am thoroughly embarrassed, guys. Just so you know.
Okay, well, I will say the 4% drop on a day like this seems to me kind of bullish because you would think this meme stock would like fall 20%, but it's holding 360. Like, do you think the TA supports that? There's some real momentum behind it.
I'd rather Rocket
I'd rather Rocket too as a rate cut play.
as a rate play. Actually, look at that, dude. I'd rather Rocket. How's Zillow? I think you look at.
But people aren't buying Open Door for the rate play. They're buying it for the mission. You know, they're buying it for $82 a share.
For the mission.
Yeah, there's this guy saying it'll go to 82, and it's become a meme. Like, the mission of getting it to 82 is the mission.
Oh, I don't play with those.
I don't play with those either. But that is the thesis.
No. I don't do that. 82. What is 40? What are you talking about?
That's the meme. 82.
What's it mean?
It's like the hymns to 100 meme is way more reasonable because hymns at 100, it's not that crazy if you look at the multiple. But Open Door to 82 is the meme.
Has anybody in the chat used Open Door?
There were actually a couple of people yesterday that said they used it.
I mean, I guess there's only one. Okay, so homework assignment, download Open Door, compare it to Zillow. Let's see.
Yeah. Well, and the thing is, it's not a marketplace yet. It's like it's a place to buy and sell your home, but it's not like a Zillow that's connecting advertisers with commissions and agents. And maybe that's what it becomes, but then it's just a Zillow competitor to me.
Yeah, it does have revenue. Someone was talking about like there's revenue. I was like, oh, 1.5 billion. I'm like, whoa.
Yeah, there's just no profit.
Sure. Yeah, that was like crazy.
Nah, I'm gonna short that B, bro.
Yeah.
You need the LOLZ, bro.
With the Z. Hey, that's an inside for me joke. They got an A+ rating on Earnings Hub. Look at that.
Earnings Hub needs to update how they rate.
I know. We'll have to call Hamid.
Okay, one more, and then we'll do a longer one. GE Veranova. Thoughts on this one?
GV. Well, if you like the backbone of of America.
Dan Ives added this to his top AI names.
AI names. I mean, it's a never sell bucket for your boy. Let's say. I don't even look at it. You just never sell. Let me do it.
So you like it? You don't even care about the TA basically?
No, I love it. I mean, I haven't even thought about it. Well, I bought GE. I only own GE Vernova because GE was one of my hood equivalents, but like a couple years ago, before it spun off GE Vernova, like when Larry Culp came in, which was at like $50, pre-reverse split. It's like $14. Anyways, so what can you say?
Not downside, not upside. Hold the course.
I mean, yeah, I haven't even like evaluation yet. So GE Vernova is was one of the reasons to own GE in general. Wow. This, 164 billion. It's heavy, dude.
Okay, last one before I give you Ethereum.
I feel like if you get into the fives, it's heavy. You know Quanta? No, I guess it's different. It's different altogether.
Yeah.
Never mind. This is also a never sell bucket, but
okay, last one before ETH. MSTR. Thoughts on this one?
I was looking at this one today, right back into right back into support. Interesting. It's funny for a guy who is not liking MSTR for the longest time. Now we have this Bitmine treasury.
Yeah.
I mean, still not a huge fan on the treasury companies. Dude, I can't look, I'm not gonna be a total flipper. I'm not gonna be a total flipper on that. I would much rather crypto straight up than a proxy. Did you see Robinhood released they're letting you SUI on Robinhood now?
Yeah.
That's kind of cool.
Football.
They picked a good one, dude. They know how to pick them.
Yeah.
Fits the thesis for me. They did a good job there.
The thing about MSTR versus BMNR is that Bitcoin already made the move from 15 to 120, whereas ETH has not made any move. And that's why I think people maybe you're selling.
ETH has made a huge move.
No, but not since Tom Lee started it. I mean, you have somewhat of it. You have like what a $700 move.
Doubled since Tom Lee started.
Oh, he started at $3,300.
No, he started at $1,250.
He did not start BMNR. What are you smoking? BMNR was started July 4th.
He started its move at $1,250.
Yeah, but he did not start buying until $3,300.
That's his fault. But the move started here.
My point is MicroStrategy went from 15 to 120.
No, I think the whole thesis of the
when Saylor started buying Bitcoin realistically in June of 2022, like hardcore, 15 to 120 move. That's why MSTR I think 40x'd or 25x'd. I think people are thinking that'll happen with ETH if it even 4 or 5x's, and then BMNR will 10 or 15x, something like that.
Oh, for sure they are. But also, ETH doesn't have the same tokenomics. Although ETH does burn. Although it yields, it does have a burn. So,
but my question to you is: do you think people are leaving Saylor for Tom Lee? Could that explain some of the weakness in this?
No, I don't think so. Is anybody in the chat doing that?
I mean, anecdotally, I've heard. I can't say it's a trend among millions of people.
Well, I mean, we could take a poll. Can you run a poll? Are you leaving Saylor for Tom Lee? Not would you? Are you? I want to know. I'm genuinely curious. Because my gut is that they're just doing both.
Correct. I mean,
if MSTR has worked for in the past, I don't know that they would. I would look at MSTR and this chart if I was bullish and be like, this is probably a buy.
Agreed. And to your point, people that are pissed off that Saylor keeps diluting, well, Tom Lee's about to do the exact same thing.
Oh, yeah.
So if you leave one dilutive asset class for another, unless the other one genuinely does 4x before Bitcoin. But if Ethereum were to go to 16,000, I feel like Bitcoin's not going to be stuck at 115. I don't know if it's 4x.
We charted Bitcoin too, and 126-ish was like the target. We were really close.
It's 52% yes. Wow.
52% I'm leaving Saylor.
For Tom, yeah.
Whoa. Well, I mean, there's our still 52.
Still 52.
Can I see that?
Steve is buying BMNR, and he hates MicroStrategy. Gene says no one gets orange pilled and then says I want some ETH. That is also fair. I
was not expecting that.
I don't think it's a real thesis that people are leaving MSTR for ETH, but for BMNR. But I think there's some part of the market that's just excited about Ethereum over Bitcoin. They hear Tom Lee on every podcast, and they're like, "Hey, I'm gonna take a chance with him."
What is it? Someone at me. So please chart the. What does it say? Please chart the. MSTR Bitcoin pair. 10,000. Oh, they're talking about.
Okay, so then, all right. So if you think MSTR is kind of more of a buy here, then let's spend some time on ETH, I guess, because that clears up.
I don't know. I think it's all relative. I think you're right into a volume shelf. I made these numbers a little bit bigger. So I mean, maybe they're saying that these are still too small. I don't know. I can't make it that much bigger. But like it's still right at a pretty key level. I think you kind of wait and see. It's a lot of momentum today. I just think that today's not the day that you do like any kind of knee-jerk reaction. One, because after big days like this, especially for option traders, things get really expensive. I also don't know that you go instantly out and buy anything because, you know, large momentum like this could lead to more momentum, and you kind of want to see what that looks like. Do we continue downside or do we not? So I think, you know, markets like run and then they rest. Clearly, this is a run. No, we need to see the next rest. So Bitcoin is not doing this, but I think MSTR is into clearly what used to be old support. So we want to see some kind of sideways move and then let it rest, and then you'll see the next run. So Ethereum, you said?
Yep.
All right. So Ethereum 4750s, you're coming into a pretty hot zone right here. Look at that. I mean, one could say that this might be bullish, dude. This is not nearly as bad as the rest. Although I will say, yet again, the move was down here that you should have been buying. And at worst, 25. I don't know what we're doing talking about this over here. This is not a good price. Just so I'm covering my bases.
Do you think it breaks back down to 35 or?
Well, so we're retesting. I think this has momentum to the upside. We're retesting this 4,000. So I think you lock on this prior high. Like this is it's like the high. Let's get like in the nitty gritty. This is 2024.
2,400.
No, 4,094. 4,093. Oh, I remember that because one of my godchildren, unfortunately, so they used to get like one Ethereum per godchild as their present. One Ethereum was their gift. And one got it literally at the tippy top.
Oh, they're almost break even.
Hey, they're almost break even. Too funny.
I remember where I was when I saw Ethereum get to 4,800 in 2021.
Yeah.
And now 4 years later, we're kind of back.
So like, you're right there, dude. Like you're right there. All cores, cold storage people. We don't mess with nothing else.
Okay.
So I think you're there, but it's interesting. So this has happened. So 1, 2, 3, 2024. It's an important moment. Support resistance. It's not like a hard line in the sand, right? We can look at Tesla. We can look at all that stuff. It can bounce. It can break through. It's more about like, does it get reclaimed at some point? And do we have this moment? And I hope to goodness that makes sense, because it can come in and it can breach, and it can breach in a large way, but it will also springboard. If it ever gets reclaimed, this is the moment that you actually get your confirmation, if you will. It's when it's like this becomes the beach ball held underwater. And this is the moment that you actually accelerate if you get that. It's not this, because if you crash through, remember this is crypto. This is the Wild West. What we could also see is we could see a lot of people with stop losses after a large run. Remember the Reddit chart. We could see a lot of people with stop losses right here that just have their orders stop. and that could be 36, where our last consolidation area was.
Do you
And
feel
so-
the Treasury's buying all that ETH, if it goes to 35, 36, is just buyers selling into the liquidity grab of these treasuries that already have the shelf offerings to justify buying more?
I mean, it's going to come down to Tommy Lee. You're going to have to make that phone call, dude. I'm just saying.
No, you're right. It's come down to the treasuries at this point.
But I think that is the
By
X
the way,
factor.
speaking of ETH, Steve just texted me a picture of him buying more ETH on Robinhood.
Dude, can we charge like Sui?
Dude, who trades this thing?
Bro, get out of the.
Do you trade this thing? Who in the chat trades SUI? Put in the chat if you trade SUI. I don't think a lot of people trade this.
What are you talking about, trade?
If I don't get anyone saying they trade this, then no one trades this.
I'm not talking about trading.
Then why would we do TA on it? I got you.
To know when to buy it and hold it.
No, who even knows what it does? What is SUI? I don't know what this
Go
thing
look
is.
it up, dude.
No, but tell me, what is it in a nutshell?
I told you that they picked a good one. I told you it's probably important.
Well, how
all I
come
gotta
no one in the
say.
chat cares about it? I've seen 2 comments.
They might not know. I have like one very crystal clear strategy is hyperscale layer 1. This is going to fit the bill. Special. It might be a good one. We'll see. I'm thinking 250s. If we see 230s.
Is it better than XRP?
Huh?
Is it better than XRP?
Oh my God. What?
That's so funny. Steve will buy Ethereum, but he won't buy XRP.
Dude, because he knows. But it's like this. I'm not buying new crypto. I'm not uploading my ID to Coinbase or any of that stuff to buy anything. But I already have Robinhood. Like I already have Robinhood, and I'm not uploading my ID to any platform that I've transacted on in the past. I'm going to shut up now. But when
real quick, I had a headline. Lutnick is considering the U.S. government taking equity stakes in chip makers that receive funding under the CHIPS Act. It will expand beyond Intel to include Micron, TSM, and Samsung.
Yo.
Whoa. Micron after hours is not really moving. TSM is also not really moving. But there you go. It's not just Intel. So, okay. So they're basically saying, hey, if we give you an equity grant or a grant underneath the CHIPS Act that Biden passed, we get a stake of the company.
Bullish or not bullish?
I don't know if that's bullish, to be honest.
Bearish for Intel?
No, I think for Intel, if it was only Intel, I think it would be bullish because like they're protecting Intel. But now they want
Right. But now Intel's no longer special.
Exactly.
Yeah. So is that bearish for Intel?
Kinda.
I mean,
they're going to own part of TSM. That's not even an American company. Like,
can they do that?
I mean, if you're the TSM CEO, you're going to be like fight with Trump. I don't know.
McBurger, Intel goes back to 23 tonight.
Well, again, this is just a rumor. It's not confirmed.
Yeah.
I mean, oh no. It's no. This is confirmed. Reuters is saying Lutnick has proposed. It's not just like some Bloomberg article. He's proposed this. Taiwan Semi declined to comment. Dude, socialism. We're back in Zoran, bro. He started a revolution here.
Yeah. I think it's all kind of like TBD right now. A lot of stuff was looking good. We entered some chop zones. Even my Boeing. Look, I think, I get Boeing coming down off like whatever this headline, no headline, but like peace, optimism. This is even choppy to me. I just feel like some things are at the lows actually doing somewhat constructive. Here's our CRM at the 200 week. We shall see. Slightly up. I don't know. I didn't like the quick rejection today, but I actually did snag this, literally snipe these lows and took another like upside here. I think the market still, you can buy high, sell low, or buy low, sell high. This is probably in the lows. Reddit, it's clearly at the highs. And home builders overall, if you look at Home Depot today, double miss, price up, nice guide. Look, overall, we'll see. This is not so bad in the grand scheme of things. There are areas that are looking a lot better that were not looking so great, but all of a sudden, maybe not looking so bad.
All right, so while you're getting into tickers, let's start rapid fire. We'll do like another 20
we're
minutes.
not at rapid fire. I thought I was wrapping up rapid fire. Shoot.
Okay, let's do 10 minutes, 10 more minutes of rapid fire. Put the tickers in the chat. I'm going to try to get as many as we can, and then
He doesn't like this chart, but I think it looks good.
NVR. Okay, Lyft.
Oh my God. Evan hits me with this, like, oh, I'm in these Lyft position. I'm like, what? And I looked at Lyft and I was like, I thought it was $12. And it was like way down there. I think trade location, if you're trading, it's the same thing. It's like 12 and like blink and it's like $16. It's high now. I don't want to, we're not chasing breakouts. It's just not the thing to do. You want to look for stuff at support. You're at resistance here. Let it breathe. No touch.
Okay. SMCI.
I mean, I assume is that support, broken support, but getting closer. You're back in this range. I think you round trip the range. 40s. I'd rather in the low 30s, and I would round trip it. I think you rest in the 40s, and you either take a round trip down to the 30s or you circle back into the 50s, one of the two. But you have to have that rest phase in the it's not going to jump tomorrow.
Okay, Weeble.
Left field on this one. If it loses 15, you see 12 and a half.
Okay. By the way, Jason's Twitter right there in the chat, so you guys can follow him there. Duolingo.
What's this? Is this yours? Your request?
No, this is all the chat. I don't know in Weeble.
Whoa. Am I in the right? No way.
This thing is stupid, bro. This
not the right ticker.
This stock is stupid, bro.
Hold on. I was on the wrong ticker.
It's still stupid.
They
bumped to 460 last week, and then GPT-5 came out. They went to 307.
I still like Grok over GPT-5. Just going to say it.
That's fair. That's fair.
Which one do you like?
I pay for Grok, so Grok.
Well, I pay for both.
Well, you have more money than me because I don't pay for both.
Oh my goodness.
I pay for Grok. Who pays for both, bro? You need that many LLMs in your life? Like,
yeah.
Grok.
Well, you're a one-man company.
Oh no, I actually like Grok better because it had Inception and Dark Knight in the top 10 movies of all time, and GPT and Gemini had some French shit from like 1930, and then
I don't think I can do teams with Grok. It's a problem.
That's also true.
No,
okay, Duolingo. What do you think?
This is a wild. If I had my, I think it's a bony frill. We're gonna bring the rhinoceros back, but it's basing out here 320s, actually 325s. This is fairly constructive. So Yeah, you had a nice earnings run. Somebody got interested here. This is that buy low sell high. I think there are areas in the market. I actually, it's somewhat constructive. This 1, 2, 3, 4-day balance with a gap up. If you fill this gap and let's say you lock in a higher low, again, I think you're building support. So I don't hate it, dude. Actually, why is it down so much?
AI is the narrative. Okay, can we do Uber?
You can't lose that. This has to be that liquidity grab.
I agree.
Not 300. You can't lose that. Otherwise, this thesis is wrong. Good.
Okay, Uber.
Uber. This is anti Tesla trade, huh?
It was actually hit close to all-time highs today.
She did close-ish. Quarterly high, 94s. Not bad. You still have this little area to get through. I think you see 97s, but it's right up there. I think you stay the course, stay long. Not a place where I would press a bet, but I don't see a reason to take measures unless you're below 94. Definitely not a short here. You have that squeeze set up right in here at 90s. So it looks like it still wants over 100. This looks bullish, actually. And it's happening over 97 and change. Extension-wise, that would be 105s, 104, just under 105 as a target.
Okay, ASTS.
This one looks heavy. This one would be concerning if I was long. I don't like, so this is like that opposite. This is like what I was talking about. Like if JPM broke down, this is actually doing it. This is probably one of the worst looking ones that you brought to me. By far, one of the worst. Is it so bad it's good? I don't know.
They don't really have earnings. They missed badly on their earnings by like 80%. They still pumped. So this is one where I think the narrative is everything. But it's been holding like the 45s for the past 2 months. But yes, it's also risky in that respect.
Yeah, so this you really need this to clean up because we're here. You're about to flip. Maybe you chop a little bit more, but you're at risk of a full-blown reversal. I mean, full-blown.
Okay.
I don't know but the chart says you're there. It still could chop a bit, but I think you're right. Like in terms of narrative, it wouldn't like this could happen, but it's this $40. It's not like it's going to do this. That's not what I'm talking about. It would be a prolonged thing, and it would probably be over multiple whatevers. But okay. 42.
Lemonade?
Lemonade. 52. This thing is just like, this is Spencer stock, right?
There's a lot of people stock. I like this one.
They tried to get you into this one too.
They tried. I did not. But I think it's a great company. I just wasn't interested.
All of a sudden.
And it's done well since we did the deep.
He wasn't having it, guys. He didn't want it. Still doesn't want it. Don't tell you. It's a big move. That post earnings. This reminds me of Reddit, dude. See that post earnings move? This looks very much like Reddit because you have that post earnings follow through and you're right on the edge. And you have this very thin structure here from 56 to 50. You have, is Spencer here? Is she in the chat? You have to ask her, does she use stop losses?
Yeah, I mean, the other thing about Lemonade is, dude, they went from like 30.
Exactly my point.
Yeah.
Right. Like that is my point. Because of that. And because of maybe the cohort that is here, to Michael's point, they just had, this was a short squeeze. And so like squeezy lemons, we know that part of this was a short squeeze, but this is exactly that super clean staircase up after earnings. But now all of a sudden at that break of structure, what we call structure, does it, this is this, do they run the stops? That one is actually possible a stop run.
Okay. ASML. And then we'll do 2 more and then we'll be done. We did Nebius, we did Hood, did a bunch of those guys. This one I think is nice from the 650s it went to, even though it's down from 850. So now it's like at 750, kind of in the middle, 740.
Yeah. It's pretty basic. I mean, it doesn't look like it's gone anywhere, but like this is such a big range. Wow. Yeah, I mean, if it pulls back, I think if you're in the low sevens, unless I'm missing something, which I don't know this company that well. I mean, dude, this is $1,100. This looks like a MRVL type setup. Like something could still be brewing. Yes. This is a tough one. I don't have a clean trigger one way though, unless it's over 760.
All right, last 2, Microsoft.
Oh, I missed it. I knew this one was coming.
The earnings just pooped in terms of the stock price. The earnings themselves were amazing, but it gave back everything. That's something. At least Meta did not give back everything.
Yeah, so this is the thing. Like we get to the end of earnings season, and the market is just some are spoiled sometimes, right? And it's like, you know, the market is like, what have you done lately? But like they always need that, like, what's the next catalyst? Because it's not good enough to be like, they just had great numbers. It's like the market is a forward-looking vehicle, meaning like it needs to know what's coming next, near term and long term, but also near term. So it needs to know, like, in the next 6 to 9 months, what do I have to look forward to? And it has to come from, what's it going to come from? NVIDIA.
I mean, if it doesn't come from NVIDIA, then I agree. I don't know where it comes from.
Yeah.
Once we get a full-on rotation, but they're like NVIDIA, dude, if NVIDIA moves up 10%, it's a $400 billion move. It's just wild. So you need 400 billion worth of capital in the S&P 493 to get that same type of move. Which is not easy. So I agree.
Something will happen. Like it will be, but like in the near term, the market just went through earnings and they're like, well, you know, they good moves, but they'll figure it out. It always shows up, but they're going to stretch. We have new iPhone colors coming in a couple weeks. We'll have a Google Pixel 10, but for right now it's Jackson Hole, and then we have FOMC. But we're holding this balance zone pretty well. Microsoft, I bet you were surprised, right? Had to see Microsoft 13F season like number 1.
Oh yeah.
Did that shock you?
Google was number one, then Microsoft. Yeah.
Well, Google, if you could, why did they separate GOG and GO? Like when you combine Google, I don't know why they separate those two, but when you combine them, yeah, Google is probably number one. But yeah, I think Microsoft usually gives you $100 every couple of years or so, and you've gotten a really good year out of Microsoft. Quite frankly, you've had a really good year. Let's measure this just to make sure. I think we're about halfway already. Right there is that halfway point on Microsoft for the extension, 550. Right in here. So I would stay still. 531. If you're back over 531, you're good. I mean, it's crazy how these things work. That was upside target. Doesn't mean we're downside yet. Quarterly low, 500. That's going to be a psychological level. We know this from a monthly perspective. My guess is we're about 50% of last month, just slightly below 50%. So yeah, I think we retest that quarterly low around 500. Microsoft, I'm just going to go out on a flyer here, say maybe you see 480 if it really does pull back 470s, something like that.
All right, last one, Amazon. Which is pretty much
help me understand this. Why is Amazon all the way up here on what earnings the market didn't like?
Exactly. Yeah, from 235 to 207, or
market did not like Amazon earnings.
Yeah, 207 right back to 228. Like I don't know.
This is confusing.
Well, Jassy said something about tariffs that the market didn't like, but
no, it was
that.
See, yeah, dude, I think the whole market is like, I don't need to do anything right now. I think we can just see how this dust settles this week. A lot of it. A lot of downside moves have happened. There are some really high flyers that could come down a bit. And there are some really, buy low, sell high. I think that's very much it. And if you're in the middle, I probably wouldn't diddle. Then you're right.
Yeah, dude. I mean, I feel like for everyone, like if you really want to buy the dip, sure. But if this is not the dip, if the dip is 5%, then
like a mediocre dip is just not going to be good enough right now.
Yeah, like Hood at 107 is not attractive for a long term. Like Hood at 95-ish starts to get exciting, 90, 85. But if the market doesn't give you that, why rush to get in?
Right.
Because it's not like Hood's going to 130 tomorrow. So what, you don't have to get in at 107,
Yeah. And if the market will always like growth, there will always be a space for growth, and growth will always come back. I just, there are certain moments. And what's weird about this too is even if the market does pull back, which we don't know, because it might be a really good September. It's possible that we have a really good September, still possible. Yeah. But if we don't, then what will happen is that healthcare will rally and there will be a lot of defensive stocks that rally. And what's weird about that is that that's not like a really fun rally. It's a slow kind of, it's not a growth rally, and it's kind of boring compared to what your guys are used to. And then you'd be like, what is this? Is this a rally? We got 5% after 2 months of holding.
It's actually following 2024's playbook. Like August volatility, 2024 was August 4th. Now it's August 19th. It was bought really quickly. We'll see in the next couple of days. Is it bought really quickly? JPAL gets dovish. You get 50 bips. Maybe we'll get 25. Maybe that Santa Claus rally happens.
Yeah. So I think, look, 3 days, maybe 5. Just hang out for a bit. No reason to get crazy aggressive one way or the other, honestly. And we'll see how it hashes out. But I think patience is crucial here for sure. And definitely no knee-jerk reactions in either direction. It would be probably ill-advised. But to be cautious, like cautious.
All right. That's Jason's Twitter, putting his YouTube as well. He spends a couple hours with us every single week for free to help us navigate the TA. So please
Appreciate
make
it,
sure to follow him.
I always enjoy hanging out with the crew, though.
Yeah, dude. People, when we lost you for 2 Tuesdays, people like, where is Jason? Why is he not on the channel? Like, what's going on? You guys hate each other? What's happening? I was like,
no, we're still friends. My name is not Chris. I will accept the agent Steve. It's fine.
Chris will be on the channel soon as well. No, he actually will be. But Chris did get his role at his job flipped, so he's like up all night. So he's so
nice
sleepy by the morning.
Yeah,
he'll be on. All right, Jason. Thank you so much. We'll talk to you next week.
Well, I will see you. I'll see you guys next week, as long as Amit allows me back.
Not up to me. It's up to the audience, and they love you.
Yeah. Well, fair enough. This is true. But
all right,
guys.
Later. Thank you.
Appreciate it. Adios. Later.
All right, folks. Red day complete. Actually, not really complete. Again, Jason's Twitter right there in the chat, because the futures are red, dude. We are still it's ugly, dude. It's a little ugly. Palantir 2% down overnight. S&P is flat somehow. Hoodie down 1%. Rocket Lab down 2%. Trump just tweeted at Powell. Trump said, could someone please inform Jerome Too-Late Powell that he is hurting the housing industry very badly? People can't get a mortgage because of him. There is no inflation, and every sign is pointing to a major rate cut. Too late is a disaster. So you got Powell, maybe, or you got at least Trump, who probably is upset at the market reaction today. And he's blaming the lack of rate cuts on Powell. So there you go. It's an ugly day. It's an ugly day. But again, I do agree with Jason. Knee-jerk reactions, I think, are not reasonable here. You can have the knee-jerk reaction, but doesn't mean sell everything, go full port puts. Like, no, I just don't think so. And if you do and it works out, then great. But if you don't and it doesn't work out because there's no massive 20% bear market coming, then it is what it is. Like, it's a red day in the midst of green days. And that is okay. But it is, look, when stocks go like a Palantir from 190 to 155, you're going to get a lot of people talking. And like, you just have to be built to stomach that. Whether you're, seeing it on Twitter or whether you're just like dealing with it in your own life. But it is what it is. Stocks go down and people will talk. They will make you feel like you're the biggest idiot. And you've got to understand your own time horizon on these names. Same thing with a hoodie. Like the amount of messages I get a day warning me, quote unquote, to sell my Palantir and hood before the world collapses. I'm like, dude, if these things actually went back down to 50, do you know how excited I would be? Would I be annoyed? Of course. But this is not a portfolio I'm building for me at 28. This is a portfolio I'm building for me at 58. And so if the market were to give that opportunity again, given how much conviction I have in those companies, okay, it is what it is. It is what it is. So I think you definitely have to have a clean mindset when dealing with this stuff. Because otherwise, you end up taking knee-jerk reactions, and that stuff usually tends to not work out, since it's basically trying to time the market, and it's very hard for people to try to time it. But does that also mean you have to jump into NVIDIA at 175 from 180? I don't think so, because that's not a dip to me. Hood from 107 to 118 is not a dip to me. The S&P from 645 to 639, that's just not a dip. And so I think this is when you lay back, let the market react the way it reacts, but that also doesn't mean you have to get super emotional about it. And so it's annoying. Yeah. Seeing your portfolio go down when you have thousands of shares of something, even by $4 or $5, that's a lot of money that you're down, but you were also up that much amount a couple weeks ago. And if you feel bad that you didn't sell a couple weeks ago before this, that to me is the most toxic mentality, because then that's like, oh, well, I should have bought NVIDIA in 2003. It's like, sure, you should have, but like, I was 7 years old. I didn't know what I was doing. It's like, yeah, of course I should have done this. I should have done that. That is a very dangerous rabbit hole. And if someone says, oh, well, you should have sold it 2 weeks ago, it's like, okay, cool. But like, I didn't know you were a psychic that knows every little thing that's going to happen. Whereas holding long tends to work out. It's 2020 hindsight, correct? It's 2020 hindsight. And again, you guys will see it in the chat too. There are, I will see trolls in the chat that say, oh, everything's collapsing. You all should have sold. I mean, like, I'm not banning those people or anything, but like, you just have to deal with those comments. And even if I don't respond to those comments personally, like, but you guys, as you're reading the chat, you'll see those comments. You will start to feel a certain way. It will affect your mental when you see a bunch of people just pop up and troll and say, Palantir is the worst stock in the world. Hood is the worst. Like, Tesla sucks. NVIDIA. It's like, dude, if that is the mentality and that's how you get your dopamine of typing in trolly comments on a live stream warning people that the end of the world is coming because of a 0.5% day on the S&P. Okay. This is a game to have thick skin in. Obviously for me as a content creator, but for everyone else as well, just dealing with the volatility of portfolio. Even if you're not being judged on social media platforms, the thickness of your skin matters in terms of your mental when holding these positions. And it is what it is. One of the best reasons to listen only to audio. Yeah, I mean, I think we have a very good chat. We have a really supportive chat. We have an awesome chat. We have a chat that's welcoming. We have a chat that's inclusive. We have a chat that will roast the hell out of me in certain moments and just it's more exciting than the stream at certain points. But then you also have some people that come in because on a red day, there might not even be people that are subscribed to the channel. They just come in because they want to troll. They want to create that misery in the world because they've either been bearish all year or they, just hate seeing people win. And that is what you have to protect your own mental from. That stopped affecting me a long time ago as a content creator, but as a human being, if you have a port that's down and then someone says, haha, look at you, you're down. It's like, this is what I also notice about people on Twitter. The people that tend to like try to dunk on people's posts, which I've seen happen many times on my posts. Whenever I don't comment underneath it because I've learned you're giving them more attention because your account is bigger. They're obviously targeting you because you have a bigger account. It's just the nature of growing a brand. And so they're going to try to come after you. But then I go to their profile and it's always a $500 course, a $50 per month Discord, join my exclusive alerts. And I'm like, oh, these people are using whatever quote unquote dunk they're trying to do on Twitter to get attention to sell their Discord because the rest of their content is useless. Like you scroll through their posts and you're like, oh, no one cares about any of this content. The only content people care about is the stuff that you try to use to dunk on people to sell your Discord. It's feeding the fire. Exactly. And so, those are things I have to deal with, but everyone in general, as you have a portfolio that could be geared to the downside, has to deal with. Also, does anyone want to be in Verizon or Coca-Cola? Like, no. So it's like, if you want to be in NVIDIA, AMD, Palantir, Rocket Lab, Hood, you have to be ready. You have to be ready for these volatile days. Like, I even hate saying it because it's so cliche, but I hope me saying it right here gives some level of comfort to maybe some new people that are in these names as well and are dealing with volatility for the first time. But it's like, I think most people recognize by now, if you have these astronomical gains, you don't get them by being stuck in Verizon, which you're going to have a really safe portfolio, but your portfolio is also not going to be moving that much. And so no pain, no gain, quite literally. You have to go through it, which is, I think, part of the game. Yeah, especially if they link their course in the next post underneath their post of trying to dunk. TJ, shout out to TJ. People just need to figure out why they are not where they want to be in life. I agree. Dude, TJ gets it the worst on Twitter because TJ sells options in his own way, and not everyone agrees with how he sells options, but it works for him. And recently, over the past couple of months, if you guys have been following his Twitter and his YouTube channel, I'll link TJ's Twitter right here in the chat. He's not really owning shares. He finds a better way to sell a put and sell a call on top of each other without having to own the underlying shares. And so that's a weird concept for people because they think of the stock market as ownership in shares. But there's a lot of people that day trade. They don't own shares either. They'll buy shares today. They'll sell it tomorrow. They're done, or sell it the next minute. There's people that sell options for a living where they don't really care about owning the shares. They just care about owning them to be able to sell calls against them. TJ does it his own way, and he'll get all these comments underneath his posts that are like, just like weirdly cruel and miserable people. A lot of he gets a lot of support, but he also gets that 5 to 10% that's just like, you're an idiot. What are you doing? You're stupid. I get that as well. And it's like, you have to be able to deal with that as a creator, but you also have to be able to deal with that as someone who manages a portfolio in general, because not everything works for every person. So the people that are like, Amit, you need to sell Palantir. It's like, dude, well, I bought it at 20. I don't give a shit. I genuinely don't care if it goes from 190 to back to 100. It's at 150. Okay. I didn't expect it to be at 190. I was hoping by 2030 we would have a party at Vegas for 100. I'm like, okay, we're here early. It's like, yeah, it's great. It's awesome. And I think I've hedged myself enough by mentioning the amount of, or at least I think I've explained the amount of times to where I think it is deeply expensive. Palantir Weekly, we have spent so much time explaining, hey, we think this valuation is up there. Anything could happen. But here's why the street might be giving it a multiple. But to my understanding, Amir, Matt, me, none of us have been like 180. That's the great buy. 420 billion. That's the market cap you buy. It's like, no, dude, we're not like idiots. We might not be selling our Palantir, but we understand it's expensive and we're ready for the volatility. And so at least people in my circle that have come onto the channel, I don't think there's anyone who said, oh, wow, at 420 billion, it's undervalued. So, you know, when people say, oh, well, you need to sell it, it's like, well, I don't think it's going back to 20. And so if I don't think it's going back that low, I didn't expect it to get this high for years. So if it's taking a pullback, it is what it is. Like, it's just not that concerning. People have been trained to rely on the company they work to handle their tax allocation. It angers people to see that it's not that complicated. Track your own. Yeah, this is the other thing. I think a lot of people are underperforming as well. And the underperformance from either just being in an index fund or picking stocks that relatively haven't done anything or being heavy cash, you get really annoyed at all these people that are overperforming. Now, the people that are overperforming have taken way more risk. A lot of us are up this year because we took a lot more risk, right? So we deserve the overperformance. So that creates a lot of animosity and jealousy from the people that are underperforming. And instead of like being happy for the people that are overperforming, they get such deep, resentment for the fact that someone took a risk on Rocket Lab at 15 or Robinhood at 30 or Palantir even at 60 back in April, and they're up on their investment. And so then they decide to broadcast their misery on social media. And I think that is something that everyone has to be ready for. So it's one of those days where I think we need to be able to just deal with managing some of the pain. Steve just called me 5 minutes ago. I'm just seeing. So let me see if he picks up right here. He tried to call in the morning, but I think we were done with the stream by then. Let's see if we can get some of his thoughts. Oh, there he is. Steve, I'm live.
Oh, look at you being live.
I just finished Technical Tuesday. And I know you tried to call in the morning, but we had the stream end. So I was just going off on a little bit of a rant here about the toxicity of social media when stocks fall and how to kind of navigate it. The chat's already exploding with your name. But yeah, if you have 10 minutes, worst day for the S&P in 2 weeks. I sound even crazy saying that. But what is your reaction to this market today?
3 words.
Oh, really? There's 3 this time, huh?
Three words. First word is one vowel.
Let me take a guess. I.
Second word is the opposite of do.
Let me take a guess. Don't.
Third word is the opposite of what is the opposite of?
You messed up on this. You should have planned this out, bro.
No, I'm trying to think of like a good one for you because other were too easy. But
this would have been great if you had planned it out, but you didn't.
The opposite of hatred.
You know, it's not that obvious, but I understand what you're going for, but it's not as obvious. The don't and do is more obvious.
I don't care.
That's what I thought. You know,
it's the same thing, as I always say. I didn't even look at the market today, by the way. I was so freaking busy all day long.
Well, honestly, what you were saying, I quite literally was echoing your statement. We have people freaking out over a
I
half.
told you that was going to happen with how high Palantir was. I told you if it goes to 150, people are going to freak out.
No, you were right. And look, the majority of people are not freaking out, but there is a segment of the population, not just Palantir, Hood, Rocket Lab. All these names are down 4 or 5. Well, Rocket Lab's down 7% today. Rocket Lab's down 2% after hours. Palantir's down 2%. I think a lot of people are now scared that their gains are disappearing, and they're taking it out on social media, you know?
Well, guess what? People need to realize that don't invest money you can't afford to lose.
Yep.
Certainly don't invest money you can't afford to lose in individual companies. And understand that stocks don't just go up. Even though I said that Palantir doesn't have to go below 100 anymore, it could still go to 100.
Of course. Of course.
I mean, look, no stock, and people like to debate the whole Cisco thing. Well, the internet was just as important or even more important than the infancy of AI because it connected everybody. Cisco was the backbone of the internet. It was the company that was pegged to be the first trillion-dollar company. Their numbers were phenomenal, and they've never gone back to where they were 25 years ago, even though they continue to grow the company at an incredible rate.
Yeah.
And at some point, I hate to say it, the valuations matter. Now, that doesn't mean that we're not going to get a reversal in a couple of days or next month if the Fed cuts rates. But at the same time, I think everybody has to just take a step back and realize that one day or 2 days or a week doesn't really matter. And ultimately, dips get bought. Ultimately, we are in a booming economy, and earnings season has been incredible for many companies. The problem is there's a segment of the market that looks a little frothy.
Agreed.
And that frothiness could experience retracement that makes for some very ugly days. So people just need to ride it out. But this is what I've been saying about if you didn't take profits at 170 or 180 and you're complaining about going to 150, I really can't feel bad.
There's zero sympathy. Zero. And it hurts to hear it, but it's not like I brought anyone on the channel or I myself that was saying 180 is the deal of the century. I think everyone has been saying, hey, it's expensive. You either take profits or you don't. If you don't, and you're crying now because it gets to 150, like there's, again, my advice has been covered calls as a way to hedge and at least get some premium. But if you did nothing to the portfolio and it went down, it's like, okay, well, it was up a lot. And in 10 years, it might be way above 180, but in 10 days, it might not.
Look, everybody loves seeing their account value have bigger numbers. I love it. Everybody loves it. But investing is a game of ups and downs. And if you don't want to take the safer route, I'm not going to say safe, but the safer route, because investing in the S&P 500, you're getting the 500 biggest companies in the U.S. that are public. I mean, that's a much more diversified, much more stable type of investment. You got to roll with the punches when stocks go up and down.
Yeah.
I mean, listen, this one, I think.
I mean, dude,
this could be a buying opportunity for a lot of things.
My NVIDIA covered calls are printing today, and that helps not feel that bad about it. And so it's like everyone has to have their own personal way to manage it, but crying about NVIDIA from 183 to 175 is not the solution.
I mean, here's the thing: most people got in NVIDIA when we were talking about, let's just say 105 to 120.
Yes,
that's when we were really saying that this is really undervalued.
Well, that's when you were. That's when you were pounding the table, 100%.
Yeah, because it didn't make sense that a company like NVIDIA was going down, but all their metrics were getting better, and it was just following a market narrative. And I said that the market narrative didn't matter. This is a great company that's undervalued. Unfortunately, I can't say the same thing about other companies, but in the long run, I wouldn't be worried about the market. I just don't like that this happens at the worst possible times. Like this couldn't have happened on the 15th when my money went into my retirement account for my paycheck. Like, really? So annoying.
Okay, now let me ask you a serious question. I mean this with all seriousness. Okay, I genuinely want to hear your answer.
Did I buy Ethereum today? You bet I did.
Well, I told the chat you bought when you sent me the screenshot. So, yes. And you bought it on Hood, which I love.
Yeah, I bought it on Hood, helping out the team.
Okay, here's the question. You are underwater on your Palantir covered calls. Palantir
Do
went
I
from
lose sleep at night? No.
no, it's not that. Palantir went from 190 to 155 over the past 5 days.
Yep. Yep.
Obviously, you could buy those calls back a lot cheaper than you could have 2 weeks ago, or you can roll them a lot cheaper. Or you can do your strategy where you buy Palantir and sell at the money calls and you'll get still the same premium. My question is, are you genuinely thinking Palantir is ready to fall back to the 120s, 130s based on today's price action and you're going to wait? Or are you kind of remembering how you felt this same time 5 months ago where you thought it would go down to like 30 when it was at 70? You got a little too greedy and it never happened. Like, how are you thinking of it right now?
So the easy answer is I'm not thinking about it. I don't know if Palantir is going to keep going down. I don't know if it's going to go up from here. All I can tell you is at the moment, I'm not ready to make a move because I have a lot of time on my side and I don't want to take cash from the sideline just to buy back these covered calls in an environment where Palantir could fall like a rock. And then I'm just out money. So to me, if it goes back up 15 points, I'm in the same position I was last week.
Yeah.
So if I was sleeping fine then, I'm certainly not racing on a day like today to go buy back my cover calls.
That's fair.
I'm going to wait. I'm going to see how it plays out. I have some things expiring over the fall that's going to free up a bunch of capital that's already in the account. My SL Green is going to get called. My SL Green may or may not get called away, but if it doesn't get called away, I'm probably going to exit the position because I don't think it can do as well as other things at this point. And the dividend just isn't what it once was, even though I have a yield on cost of like 12% at this point or something like that. But I am probably going to wait because I think the odds are that Palantir could go lower. I would say there's more odds of Palantir going between 125 and 150 instead of going back to 175 to 200. Just because I thought it was overvalued regardless, and it was going to level off and was going to trade in a range. I am probably going to buy back some of the cover calls before their next earnings because I do think their next earnings is going to have 50% year-over-year growth. And if they come out with a 5 number, I think that the narrative is going to change with the market, depending on what Palantir shares are doing. But in the short term, I'm not doing anything. Over the next couple of months, I'll probably buy a few of them back.
I think that's very fair. I don't think that's being overly greedy or overly excited. I think you're letting it play out.
No, I don't have a crystal ball. So Palantir's momentum was violent to the upside. So you may get a lot of algos getting triggered with this sell-off. And one day is not enough to make a decision. And if it sells off tomorrow, and if we get another sell-off on Thursday, you may get a lot of algos being tripped. I may be in a better position to buy them back. And also, like you said, the new chains come out in September, so I want to wait till then.
Yeah.
Anyway.
I agree.
So I'm not doing anything at the moment. But I also wouldn't be freaking out. And if you are freaking out, maybe you should consider what your ROI is and at least pull your initial investment out.
Yeah. Dude, if you are freaking out about Palantir going from 190 to 150 and you bought in at like 2030 and you've taken no profits, you've sold no covered calls, like it's not a bad thing, as you said, to at least take your initial out and let it ride.
And the easy thing for me, I haven't experienced any of this here because my covered calls are so low that it could go to 100. My account value is not changing.
Right. Okay, so if Powell is hawkish on Friday, you think it matters or world moves on? Because I think that,
No, because Trump is going to fire him in September if he doesn't cut, so it doesn't matter. Like, he's going to find a way just to fire him or take over the Fed. And I'm not saying that to be funny. Like, I really do think he will figure out a way to hold him liable for something that goes against what the mandate is. Like, they're going to figure something out.
Yeah, I think if he doesn't he doesn't cut, he's getting fired, bro. Or he's going to get
100%.
in a really
100%.
bad situation. Yeah. I mean, that's fair. It's very fair. Okay, so you didn't pay attention to the market at all today.
No, I legitimately was in meeting after meeting after meeting after meeting. And if you saw the type of work I had to do today, it was just going through journal entries of 3 different policy years. It was a lot of stuff today. So I did not have a single moment to look at anything.
But you bought ETH.
Yeah, after hours. I bought it when I sent you the picture, like 6.
Dude, hold on. You're trying to be a crypto bro, and you used after hours as a term for crypto?
No, just after hours. After hours.
Crypto doesn't trade after hours. It's just crypto.
No, but it's 6:11.
But that's not after hours.
There's more after market hours.
No. If you bought Apple at 6 p.m., I'll give it to you. But you bought there is no market hours.
Don't try to turn this around.
What do you mean?
Your conversation was about, did I watch the market today? And I said no, because I was working and I didn't have a second to look at it. But I bought ETH after hours.
Brother, Ethereum doesn't trade after. There is no after hours for crypto.
Ethereum does not trade in hours. It trades 24 hours. But my intent of the discussion was around the market. What is after hours for the market?
Look, my understanding of the word after is that you can imagine a line.
After the market closes.
No. There is a line, and then you can be before or after that metaphorical line. If there is no line, because it's 24 hours, you used an incorrect term, and you should apologize to the crypto community for behaving in that. That's all I'm saying.
Well, we're going to disagree, because the tense I used was that I did not look at the market during the day.
I'm just saying, I think...
But regardless, I'm becoming a crypto bro.
Wait, so did you buy BMNR yet?
Yeah.
You did? You actually bought it?
Yeah, I had a trade set up for today for it. It got triggered.
Wow.
I may even buy some SBET.
Oh, you're really getting into Ethereum at this point.
Oh, we're going. Like, if Ethereum goes down, like, I don't know, I buy it every night at this point.
Dude, wait, what did you watch that convinced you this much to just...
I didn't watch anything. I just freaking did a little research, and I'm like, you know what? I really do believe in this now. The way that these Bitcoin maximalists are, I'm becoming an Ethereum maximalist.
Look, I like it.
Because Bitcoin has no utility.
I think the real reason you like Ethereum is to prove your point that Bitcoin is stupid. I think that's the actual.
It's the anti-Bitcoin?
It's the anti-Bitcoin.
I may make a t-shirt, the anti-Bitcoin.
I think
utility for all.
I think ETH's going to win long term, so you'll be fine. But yeah, I like the trade. I like the idea. I don't know what the heck's going to happen with the treasuries, but I like that you're embracing ETH, because
it's not a trade. This is money getting locked up for 5 or 10 years.
Well, that's even better. That means you don't give a shit if it goes up or down. Yeah.
Oh yeah. I saw there was close to 4,000. I just bought more.
I love it. There you go.
And you know what the worst? Can I just tell you the worst part about it?
What?
Is that I can legitimately buy it at 11 o'clock at night while watching TV.
Yeah, well,
that's the worst part about it, because I just find myself on the couch and I'll just log in, like, oh, ETH's a little down, let's buy some more.
Yeah, just throw $20, throw $10, throw $100. Like, it's.
I mean, we're not throwing 10 or 20, so.
The point is, you can just throw whatever you want at it. And
the point is that it is legitimately open 24 hours a day, and I really hope the stock market never does that. Otherwise, we'll have to be glued to TV screens 24/7.
No, I actually agree with that. I like, as much as I love the markets, like, you do need a break at some point. And like 8 p.m., the 24 overnight markets trade, but they're thinly traded, so it's not that serious, right?
Yeah, it's not serious at all.
I agree. It is nice to have it close at a certain time.
It is nice to have it close.
I agree. You know, I had a dream about Tom Lee 2 days ago.
Nah, you shouldn't be saying that openly. You should really,
wow, you should have gave me that advice 2 days ago.
People are going to get the wrong idea.
Oh, people already. I didn't even think people. I genuinely did not think people would think what they ended up thinking.
People are going to get the wrong idea when you start saying stuff like that.
But I legit had it. Dude, we were in the high school cafeteria freaking.
I don't want to know. You and your dreams, I don't want to know. Especially when you start talking about high school cafeterias.
People,
Next thing you're gonna say is you were in High School Musical with them. Like, I don't want to know.
oh, that would be. Oh, if Tom Lee and I were in High School Musical.
God.
Don't let that get in my subconscious. That would be.
Well,
I
don't want to know. How about that?
No, but people said it's a sign for me to buy BMNR.
Listen, let's go. Do it.
No, I'm
Join
waiting,
the club.
I'm waiting for 40, bro. Waiting for 40.
Buy now and buy at 40.
Nah, I'm waiting for 40. I want my entry at 40.
All right.
If not, I'll just wait. I might sell some.
You're a good role model. You're a good role model.
You know I'm going to Miami tomorrow?
Yes, I'm aware.
I will be out there.
Yeah, you're going to be out there in the wild.
In the wild of Miami tomorrow.
In the wild. I should really just fly down, but...
You should fly down, bro. That'd be so much fun.
Yeah, I got a lot of connections down there.
What? Why do you have connections? What? What connections in Miami do you have?
I have a lot of connections down there.
What? You know a guy who knows a guy in Miami?
No, I don't know a guy who knows a guy. I know the guys.
Okay, well, I gotta figure out what guys you know and see what connections you got down there. So, all right, Steve, appreciate it. I will talk to you in a bit. And any parting words for people on this 0.5% red day on the S&P?
Yeah, look at a long-term chart of the S&P and realize everything's going to be fine. And that if you get a 10 or 15% pullback, it's usually a good time to think about allocating capital because long-term, the market has always gone higher. I mean, I don't know what to tell you. I mean, the article that I wrote spelled it out. If you invested at the worst possible time, every time on a long-term basis, you've done fine. So even if you dumped in money a couple of days ago when it was at the top, even if it goes down 20%, if you're in this for 2, 3, 5, 10 years, it doesn't matter. You're fine.
It does not matter. I agree.
It does not matter. And that, once again, that's why I always say that, it's one of those things where individual companies is a much different ride than the overall market.
Yeah, and for those that haven't subscribed to the newsletter, I linked it right there in the chat. You can read his first article on the S&P 500 historical performance.
You're going to like what I'm writing right now.
Is it about Pokemon?
No, I'm actually writing something that goes against a lot of things about how Coca-Cola's dividend is no longer interesting.
Oh, this is going to be a spicy. You're going to make the argument that buying Coke is stupid right here.
I'm going to make the argument that buying Coke is stupid right here.
I am excited to read that one.
And the reason is because it's already up 12.5% this year. And even though the market's down, it's still up. I mean, from when the last time I looked at Coca-Cola, the market's up 6.5%. Coca-Cola's down 1.5%. And when you look at the valuation, I'd rather buy Amazon at the same valuation. There's no reason to buy Coke over Amazon. And I think there are so many investment products out there these days, from closed-end funds to ETFs that are income-focused, that getting a 3% yield for Coca-Cola, even though you got 4 or 5% annualized growth rate, doesn't matter when you can just go buy QQQI and get 14% and get paid monthly.
Yeah, I agree.
So, and I think the income community is going to get pissed off. But I kind of don't care. Not kind of, I really don't care.
Well, that's the theme on these red days. I don't care. So
yeah, I mean, and that's the other thing. People look at their phones and they look at the market all day long. I didn't even know the market was down today until like 5 o'clock or 5:30.
Yeah, and look, all of us that are on these streams are guilty of that, which is why we need the reminder on days like this that we're so obsessed with looking at it. And look, in April, we were also obsessed with looking at it, but we got normalized to the red because everything Trump said every other day tanked the market. But then we had 3 months or 4 months of green constantly. And so you get a day of red. You got to be okay with normalizing the fact that it's not always green.
Yeah, I mean, we're going to be fine. Like, it is going to be fine. Nobody should be freaking out. Because think about legitimately what's the worst case scenario. That the broader market goes down by 15 or 20%. do we really think it's going into another bear market? I don't think so. What's the reason we go into a bear market from here? Corporate earnings are expanding. I mean, I'm not seeing any headline news that makes me think we're going into a bear market.
I 1000% agree. And this is so important to understand. Like, a pullback is normal and healthy in a bull market. A bear market, there needs to be a COVID, there needs to be something Liberation Day that fundamentally restructures the economy. I don't see that.
There needs to be something.
And maybe it pops up out of nowhere, but like I don't see it in the data.
Well, all I got to say is I think that you'll like my BMNR article. Maybe that'll convince you to get in before it hits 40.
Did you write it already?
Yeah, it's published.
Okay, let me link that.
It got published last night. I can't believe how many. If I showed you how many views it has,
How many views?
I cannot. A lot. It's probably my most.
Dude, it has 60 comments in one night.
It probably has more views than any article I've written this month or last month, and it hasn't even been out 24 hours.
To people,
I'm shocked at how obsessed people are with Ethereum.
No, it's not. It's Tom Lee, bro. If you did this on SBET, it wouldn't be the same.
All right, well then I guess I'm gonna have to do it on SBET. Let's see.
I really do think you should. I think Tom Lee is what people are excited about.
Well, I gotta tell you, I think it's gonna do a MicroStrategy type scenario.
I think it might. Ethereum's got a 5x, but I think it might.
Yeah, and it has utility and Bitcoin doesn't. I think that that's what we need to do. We need to get a Bitcoin maximalist and get them to try to convince us.
Oh,
that Bitcoin's a good idea.
I would love to say I have one. His name is Jeff Walton. I would be he would be so down to try to convince you. If you want to actually have a legit conversation, then I can set it up.
I mean, I don't know how legit of a conversation it's going to be because there's a 0% chance of changing my mind.
But that would be the fun of the conversation because he would try to convince you.
Yeah, I mean, he'll try. I mean, we could do like a Saturday night freaking showdown and I'll say, if you can convince me, I'll put a bunch of money in it.
I think it would actually be fun because he loves like the challenge of convincing people. So
all right.
That'd be good stuff.
Yeah, Ethereum over Bitcoin.
All right, Steve, thank you. We appreciate it. Steve's newsletter and BitMine article in the chat. I'll talk to you later.
All right, stay out of trouble.
All right, later.
Later.
All right, folks, that is it for me. Thank you, everybody, for joining. Again, it's an ugly day. It is what it is. It happens on days. Now, the question for tomorrow is, does the ugliness continue? We will see. I'll be live on the open. It's going to be a little bit of a shorter close tomorrow because I do have a flight to catch at night. I need to pack too. Dude, I haven't packed anything, so I need to like do that. But yeah, we will be live tomorrow. We'll try to see what we've got going on. And if it continues tomorrow, it continues tomorrow. It is what it is. If people end up buying the dip, that's fine. I think it could continue given Powell doesn't speak until Friday. Or maybe today was a head fake. But I think we should all be prepared for any options. And regardless of what happens, it should not be the most triggering thing in the world, given the momentum we've seen over the past couple months. Yeah, so we will do a market close. I'll probably start the close earlier because it's going to have to end at like 4:30-ish. We might start at like 3:30 instead of 3:45. We will have an open on Thursday, probably not a close. And then on Friday, I think we will be able to do open and then JPOW. So maybe not a close on Friday, but we'll try to cover JPOW, which I think Powell talks at 2:30 like usual. So we should be able to do Powell. And then Friday, we should have the open as always. And that's what we got. All right. Did you say early? Yeah. So I will have to start it early tomorrow. I'll see everybody tomorrow morning. Thank you all for being here. For those that are coming to Miami, very excited for it. I will see you guys in a couple days. And unfortunately, maybe the markets are a little wonky before Miami, but hopefully the good vibes and ability to connect in person will make up for markets maybe not being at the levels that they were last week. So excited for it. I'll see you guys there. And I'll be back tomorrow in the market for the market open. All right. Bye, everybody. Love you all. Take care. See you guys tomorrow morning. Bye, everyone.